Cloud. You beat. So as a group, we got it. There we go. Then, sure, why not? So it's recording. Hopefully the participants can see me and hear me. At least they could before. So I suppose the first thing to do is discuss what's required of you. You know what's required, right? More or less. But let's go over this. Let's see if I can get this thing off of the screen here. Share screen. Share this. Yeah. There we go. Hi, how you doing? There you go. At least one person can hear me and see me. Good. Okay, I'll use you as the test case then. So this is the full semester course. Some things are offered over the first half of the second half of the semester. This is like the full course. I'm supposed to have 10 students in class. Let's see, I have 10. Good. Sign your name over here before you leave. And I have 190 students in cyberspace. So, yeah, it's a big class. It's actually like 3 classes in one, sort of. And we're going to be covering the same material. The students in cyberspace are going to have a little different approach, like I won't take attendance. And even for the students here in the live class, I'll take attendance, but only so I know who's here. Because sometimes the dean asks me, did so-and-so show up last night? And I have to be able to say yes or no. I can't say, did I don't know, because that sounds like I don't know. And so there's no penalty if you don't attend class, in spite of what the syllabus says. And of course, if you're in cyberspace, I don't know where you are. You could be all over the world, because we have several continents to choose from and so forth. So let's just go through this. I did mention that we were using Adobe Connect, but then this afternoon I found out we're not using Adobe Connect, we're using Zoom. That's for the people in cyberspace. This lecture is being recorded. At the end of the lecture, they're supposed to give me a link, and I'll send you the link so that if you can't listen to it live, you can listen to it whenever you're in the south of France or wherever you are on weekends or evenings. And I'll send it to the people in the live class too, just in case once isn't enough. That's an accounting joke, folks. So some accounting lectures are so exciting you can't listen to them just once. And hopefully this will be one of those. We're using a new book this semester, so I guess you can't buy a used one unless you get it from Amazon or half.com or something. We'll be using, yes, question?
I'm sorry, before you move forward. So like with the class, you say attendance is not required. They say there's one person in class. Are you still gonna like record the session for the people online? Or?
Yeah, that's another thing I should mention. Please come to class, at least one of you. Because one time last semester, nobody came to my live class and I had to talk to the TV set or the camera. And it's not fun, you know? If I can have at least one person to talk to, then it's much more fun for me. So make sure you can take turns showing up if you want. At least, you know, if one person shows up, that's great. Did that answer your question? Sure. Yeah. I'm gonna talk for 3 hours regardless of who's here.
Okay.
Or if nobody's here, whatever. So yeah. So you're gonna have a quiz, more or less for every chapter. In the first chapter, there really aren't any multiple choice questions to give you. So there's no quiz for chapter 1. On the exam, I might have something on chapter 1, but it's all general kinds of stuff. There's no numbers in chapter 1. I like numbers. We all do, don't we? No. I was afraid I'd hear that, but yeah, I know you're all management marketing majors. It's my job to convert you to accounting majors. I'll see how that works. Last semester, one of the students said he was so excited about accounting that he's going to get a second master's degree in accounting. How about that? So I got one convert. We all need more accountants, don't we? Yeah, sure we do. So anyway, but that's okay. I understand some of you, a small minority of you, probably don't like accounting, but that's okay. This is, in terms of degree of difficulty, this is like an undergraduate class. So if that makes you a little more self-confident, that's good. And I'm going to soup it up a little bit because this is an MBA course, but I'm not going to soup it up so much that you scream too much. Maybe just a little bit. So anyway, we're going to use Connect. That's a McGraw-Hill product. For the quizzes, I've posted some of them already on the link. You have the link and everything. You have 10 multiple choice questions usually, at least for the first few quizzes. You have 10 multiple choice questions. You have 50 minutes. So that's 5 minutes per question, more or less. That's twice as much time as what you get on the CPA exam. And I know you're not interested in the CPA exam. Or I should ask for a show of hands. How many people want to take the CPA exam? There's a little finger raised. Yeah, make sure you raise all your fingers when you raise fingers. Okay. So I might get some converts. That's okay. You don't have to be a CPA. We have about 400,000 of them in the United States out of 2 million accountants. So about 20% of the practicing accountants are CPAs. And that's nice because they're in short supply. It means they can get the big bucks. So, but again, you don't have to be a CPA. The questions on the quizzes and the exams, some of them will come from the CPA exam, very few. And the few that do come from the CPA exam will be the easy ones. So you don't have to worry about getting really nasty CPA questions. If it does come from a CPA exam or a CMA exam, Certified Management Accountant, they'll be the easy questions. And the quizzes are open book, open notes, open telephone. So the thing is, you only have 5 minutes on average to answer each one. And so you should come in there prepared to answer at least some of them without opening the book because you have time constraints. And I put on a practice quiz just so you can get the hang of it. And it'll be graded, but the grade doesn't count because it's a practice quiz. And then I'll put 1 or 2 or maybe 3 quizzes per chapter that will be graded. And I'll only count the highest grade. So if you get a 30, a 40, and a 90, you get a 90 for that chapter. So that makes you feel good, right? Yeah, sure. I'm trying to make it good for you here. You know, yes.
Is there a minimum, like in my last analytics class, you got to get a 70 on? Is there a minimum? Like if all 3 of them were 60, then?
Oh, no, I'll just take it. If all 3 of the quizzes are 60, then you get a 60. There's no minimum. Yeah, you have to get 80% to get a B for the course. I think in this program, you're allowed to have 2 C's, but then you have to offset them with 2 A's. So you can get an A in this class and get a C in something else. Yeah, get your A's here and get your C's somewhere else. So the nice thing, if you have 2 or 3 quizzes and you get a 90 or 100 on the first one, you don't have to take the other ones unless you want to. And I would suggest you take all of them because it's a good learning experience. The questions will be different. The way the software is set up, they're all scrambled. So you get different questions each time. And what was A the first time might be C in somebody else's exam. Everybody's going to get different quizzes.
Yes. You said if you make a 9 on the first 2, you won't have to take the 3rd one?
Well, I mean, it's up to you. You know, if you're saying...
I'm thinking about 90, the 3 exams. You're not talking about the 3 different exams.
No, not the exams. These are the quizzes that you get with every chapter except chapter 1.
How many other?
Yeah. Yeah, if you get 90% on the first quiz and you're satisfied with that grade, you don't have to take the other ones. No. If you get a 30 and a 40 on the first 2, then you should take the 3rd one, if there is a 3rd one. So, and I was thinking, instead of having a practice quiz for each chapter, why not just give you quizzes that are all graded? Because it doesn't really matter. If you do lousy on the practice quiz, it doesn't count because the other grades will be higher, hopefully. But if you do get a good grade on the practice quiz, you don't have to take the other quizzes unless you want to. Which, again, you should take all the quizzes because it's practice learning opportunities and so forth. And some of those questions might appear on the exams, because I take it from the same source, well, sort of from the same source. If you're in cyberspace, at least there's a rule that says at least 30% of the course grade has to be proctored. So for those 90 students that are out there in cyberspace, you have to sign up for a proctor. There's 2 ways to do that, and the syllabus explains both of those options. If you're in the live class, I'll give you exam number 2 right here. There'll be a 3-hour exam with paper, just, you know, the old-fashioned method. It'll be at least partially multiple choice, maybe all multiple choice. I haven't decided yet. So the second exam will be given live in class. The first and the third exam you'll take through Connect. And those will be open book and so forth. So, let's see, the quizzes are worth a total of 30%. The second exam is worth 30%. The first and third exam are worth 20% each. You need 90 for an A, 80 for a B, 70 for a C, and so forth. It talks about using Connect. Make sure you read all of that. There's a lot of fine print here. And on page 4, at the bottom of page 4 on the syllabus is on Canvas. If you haven't had a chance to look at it yet, please take a look at it. Print it out, maybe, if you should be so inclined. I listed homework for each chapter. And the reason I listed these things is not so you could do the homework and hand it in, but so that you could know what I'm going to discuss in class, because there's too much stuff in the book to discuss everything in detail. So what I want to do is discuss the main points, the highlights, the things that I think are most important. And those things are listed in the homework section. So if you do those before class, I'm going to discuss those things in class. And with whatever time I have left, I'll elaborate on those things and maybe I'll discuss some other things. But if you do all the homework assignments and understand them, you should have a pretty good shot at getting a good grade on the quizzes and exams. And the answers to the homework are already posted on Canvas. And I posted some other answers as well, in addition to the homework questions, in case you want more learning opportunities. We'll do a chapter a week, pretty much.
Excuse me, Dr. Can I ask a question?
Just flipping through this, if there's anything else I need to discuss. I guess that's all I need to discuss about the syllabus. Are there any questions about this?
You said, are the quizzes due on Sundays?
Yeah, the quizzes are due no later than Sunday night at 11:59 p.m. New York time. And there's a thing in the software, if you turn it in late, it deducts 10% for every hour you're late. So that's just a little quirk in the system. But again, you have 2 or 3 quizzes that will be graded with every chapter. So again, if you get a good grade on the first one and you're satisfied with that grade, you don't have to take the other ones. But you know, you have lots of opportunities. There's no quiz for chapter 1 because there aren't any multiple choice questions for chapter 1. And so the first quiz you'll have, it's called quiz 2, but it's really chapter 2, quiz 1. And those are posted on Connect. Any other questions so far?
Dr. McGee, I have a question.
Huh?
Dr. McGee, I have a question.
I have a question.
Yes.
On the syllabus, you mentioned the second exam will be proctored, and then you recommended that we make arrangements, you know, like next week. So how soon are you going to provide the link so we could?
Oh, well, yeah, the second exam, if you're a cyberspace student, if you're in section D80, you have to have it proctored by someone. We have 2 different ways to proctor, and those are both in the syllabus. So if you're an online student, you should make an arrangement to have someone proctor that. And then I'll send the exam to them. And, well, it depends too. You can have a proctor in your house. If you have a camera, they have to see your face on the screen to see that you're not looking at stuff. That's one way to do it. So yeah, you have to sign up with one of those 2 proctoring services if you're an online student. If you're in section 1, that's this section, the live section, I'll proctor the exam. Because I have nothing better to do on Wednesday nights. I do. No, I really don't. No, I'd rather be here than anywhere else. You can believe that if you want. I like teaching accounting. You're going to see. Oh, you're going to see how much I love it. Yeah, you might even see that tonight. So, by the way, for those who came in late, there's an attendance sheet. Just make sure you sign it before you go. 6, 10, 12. 13, 13 students in class. There's supposed to be 10. Either 3 people signed up or else we get.
Yeah, well, I'm
You're an online?
cyberspace, but I just-
Oh, you're cyberspace? That's okay. Yeah. Yeah. Okay. Yeah. By the way, if you're out there in cyberspace, we have lots of empty seats here. Feel free to sit in if you want to. So let's take a look at
Dr. McGee? I
the
have a
PowerPoint
question.
slides. These PowerPoint slides are also posted on Canvas for your viewing pleasure. The way I usually do this, I start off with the slides. I skip a few. Some slides aren't as exciting as others. They're all pretty exciting, but some are more exciting than others. And when I'm finished with those, then I'll go over the homework assignments. That's usually how I do it. Sometimes what I do, especially for the undergraduate classes, I give them the option. Option 1, I'll do the slides first. The nice thing about the slides is it provides a nice overview of the chapter. Once you have the overview, then I go into the number crunching, the exercises and problems at the end of the chapter. That's option 1. Option 2, skip the slides completely. That way I have more time to just do the number crunching at the end of the chapter. That's option 2. So today I'll use option 1. I'll go through the slides first, and there aren't any numbers to crunch in chapter 1. That's the problem. But give me your feedback. If you want me to skip the slides, if I get a majority of students who want me to skip the slides, I'll skip the slides, because both methods are exciting for me. But if only one method is exciting for you, that's the method I'll give you, the method that you find most conducive to learning. So chapter 1 is an introductory chapter. Management accounting, also called managerial accounting. They mean the same thing as far as I'm concerned, but different books call them different things. There's a difference between financial and managerial accounting. If you want to split accounting, there you go. I have to keep in front of the camera here. There's a little camera. So I'll just speak like that once in a while, maybe.
Dr. McGee,
Accounting
do you
can
mind
be
if I
divided
interrupt for
into
just a
2
minute?
broad groups based on certain characteristics, financial and managerial. The financial accounting class in this MBA program is a 550 course. You've hopefully taken that or something like it, an equivalent once upon a time. That's on financial accounting. Financial accounting is aimed at external users. And as you can see on the screen here, like the users, financial accounting, external persons. In other words, people who are not employees of the company. Shareholders, potential shareholders, investors, people who play the stock market, potential lenders, people who might want to buy your bonds or who might want to lend you money. Those are all external users, people who are not employees of the company. Whereas managerial accounting, the users are people who work for the company. It could be managers who plan for and control, blah, blah, blah. I don't want to read all of that. You can read that. But basically, managerial accounting is concerned with numbers that people within the organization find important for decision-making purposes, for planning, what are we going to do next quarter kind of thing, or for controlling things. You know, we want the cost per unit to fall below $10. How can we do that? Or what's the cost per unit now? That kind of information. That's all management accounting information. Another thing that separates financial from managerial accounting is the time focus. Financial accounting is like applied history. You look to see what happened last year or last quarter. You look at the income statement for last year. That's accounting history. Whereas managerial accounting is more concerned with the present and the future. You know, what's the product cost for 100 units? Can we cut that by 10%? How many units do we have to make next year in order to break even? Or what are our sales figures going to be next year? Those are all future kind of things. The third one, verifiability versus relevance. Financial accounting is more concerned with objectivity and verifiability. Can you actually verify these numbers if you get audited? Would 10 accountants come up with the same numbers if you were audited? And the answer is sometimes no. But that's, you have, remember from your other accounting course, financial accounting, you have options. For inventory, for instance, you have FIFO, first in, first out. You have LIFO, last in, first out. You have average. For depreciation, you have several methods. Straight line is the easiest one, but there are other accelerated methods. And if you use different methods, you'll get different results on the income statement and the balance sheet. But you should try to be objective so that all accountants, if they look at the same information, they'll get the same conclusions and so forth. And it has to be verifiable for financial accounting. Whereas managerial accounting, it's about relevance. You know, do these numbers make any sense? If any of you have worked in business where you get these reports every week or every month, nobody ever reads them. Has anyone ever been in a situation like that? You get reports you know that nobody reads, or maybe you have to prepare a report that you know nobody's going to read. That's not relevant. You should get rid of those reports. I mean, easier said than done. You know, they say, well, it's always been this way. You know, the status quo is the way it should be. We've always had these reports. We think someone might read it. And so you spend 40 hours making this report that probably nobody's going to read. That's not relevant. You should get rid of those reports. Again, it's easier said than done. The fourth one, precision versus timeliness. You can take a lot of time to really fine-tune the numbers. Like Lloyd's of London. Have you ever heard of Lloyd's of London? Big insurance company. And very old, too. It goes back to the old British Empire days. In the old days, meaning 30 or 40 years ago, they used to take 2 years to issue their annual report. So if you wanted their 2017 annual report, you'd get it in 2019, maybe 2020. The nice thing about that is that by waiting 2 years, they could come up with the actual numbers. Because if you're an insurance company, you don't actually know what your liabilities are going to be until somebody files a claim. So if you just wait 2 years, you can reflect the actual liabilities on the books. The problem with that is the information is no longer timely. The longer you wait to report the information, the less relevant it is. It gets stale very fast. And that has an adverse effect on stock price. That's something to be considered. So there's an offset between timeliness, getting it fast, and accuracy, getting the right information. Financial reporting is more concerned with timeliness. In fact, in some countries, they have a rule that says you have to issue your annual report within a certain number of days or a certain number of months after year end, because the longer you wait, the less valuable the information is. And so getting back to number 4 again, the emphasis is on precision versus timeliness. Number 5, the subject. Primary focus is on company-wide reports for financial accounting. You can have a consolidated balance sheet and a consolidated income statement, where if you have the parent company and 40 subsidiaries, you just combine all that information together on one page for a balance sheet and one for an income statement, or maybe 2 pages tops. Everything is consolidated and combined. It's a company-wide report. Whereas for managerial accounting, you can split things into product lines, or you can split it into geographic locations, or store number 83. What's the profit margin on store number 83? You can split it into segments, very fine segments. You know, what's the sales figure for store 83 for the second week of June, for instance? Very fine slices of the pie, so to speak. Number 6, rules must follow GAAP. What does GAAP stand for? GAAP?
Accounting principles.
Yeah, generally accepted accounting principles. Yeah, every country has them. There are different groups that make them. In the United States, the Financial Accounting Standards Board makes the rules that accountants have to follow for annual reports and quarterly statements, but only if they're a publicly traded company. If it's a private company, if it's your company, you don't have to follow those rules. You can make up your own rules. But if you go into the bank and try and borrow money, if you don't use the official rules, you're probably not going to get the money. So there's a lot of market-related pressure to follow the rules. And IFRS, what does that stand for? International Financial Reporting Standards. There's a group based out of London, but it's really a worldwide group, the International Accounting Standards Board. They make accounting rules that a lot of countries have adopted. More than 100 countries have adopted some or all of their rules. And the nice thing about those rules, they're a high quality set of rules, and you don't have to reinvent the wheel. And by you, I mean different countries. There are over 200 countries in the world. More than 100 of them have adopted some or all of those rules. All of the principal countries. And by principal, I mean the ones with the high GDP. They've all adopted either those or US GAAP. It used to be that countries would adopt the US rules, but now there's this competing set, IFRS, International Financial Reporting Standards. Some people say those standards are better than US rules, and some people say the US rules are better. There's a certain amount of nationalism involved there too, but they're about 90–95% the same, or 5 or 10% different, depending on how you look at it. So for financial accounting, there are a whole bunch of rules that you have to follow. And there are also national rules. If you're not a publicly traded company, you still have national accounting rules to follow. For management accounting, there are no real rules other than basically applying microeconomics. Everybody likes microeconomics, right? No, who said that? No, I won't hold that against you. But 4 of my 13 doctorates are in various fields of economics. So I'll throw that in once in a while, little economic stuff. That basically it's the study of the firm. Remember the definition of microeconomics? It's the study of the firm or the individual business. And so managerial accounting answers questions like which product is the most profitable? Or if we increased advertising by 10%, how much could sales increase? How much could that increase our bottom line? Those are all basically microeconomic questions. And you don't have to follow generally accepted accounting principles for that. You just apply microeconomic theory. You crunch the numbers to answer whatever questions you think are relevant. Like, should we add this product line or should we drop this division? Things like that. Requirements, number 7 for financial accounting, mandatory. You have to report at least annual financial statements in the United States. There's also a rule that says you have to report quarterly information, unaudited quarterly information. Other countries have similar rules. In some countries, you only have to report annually. Some countries, semi-annually. In the United States, it's quarterly. For managerial accounting, no real requirements. You just do whatever's good for your organization. And so those are the main differences between financial and managerial. For management accounting, basically it has 3 functions. Planning, what are we going to do for the next 12 months? What are we going to do for the next quarter, kind of thing. Are we going to hire more people? How many more people are we going to hire? How much inventory should we keep on hand? Should we get rid of some inventory because it's been going slow? Maybe we should cut the price. Those are all planning kinds of things. Controlling, how can we control costs? If we want to keep the unit cost under $10, what do? We have to, first of all, figure out what's the unit cost now. Maybe it's $12. We might ask ourselves the question, how can we get it down to $10? Those are all controlling kinds of functions. And then decision-making. Should we make this product or should we buy it on the outside? Should we make it out of plastic or should we make it out of some kind of metal? Should we make it out of wood? Should we have employees do it or should we get machines to do it? Maybe you've heard about this in the news. If the minimum wage goes up to $15, what do? We use machines, maybe. So those are all decision-making things. You can get answers to those questions by applying management accounting concepts. We don't let ethics get in the way, do we? We do? Do we let ethics get in the way? Okay. Well, when you're thinking about, let's say the minimum wage goes up to $15 an hour, and it's up to you to decide, should we continue to hire people to do this work, or can we get machines that will do the same work for less? Is that an ethical decision? Do you have to be concerned with ethics? Some people would say yes, some people would say no. The nice thing about ethical questions is I can throw it out for your consideration, and I don't have to give you an answer. That's the funnest part of the course. So some people would say there's an ethical component there because you're throwing people out of work, blah, blah, blah. And other people would say you have a responsibility to your shareholders to maximize profits. And if people are charging more than what the market says they're worth, then you get machines because you don't owe any duty to them other than to pay them if they work for you. And other people disagree with that. So I just throw that out for your consideration. In chapter 1, they do mention Milton Friedman. Do you recall reading about him? Maybe you heard about him. Nobel Prize winning economist. died a few years ago in San Francisco at the age of 90 or 91 or 92, something like that. Famous guy. He said, among other things, that the only duty a corporation has is to its shareholders. You know, as long as they don't commit fraud or cheat or steal, things like that. If you play by the rules, and if they're a good set of rules, since think of a corporation as like a private club. If you belong to a private club, you do things that are in the interest of the club members. If somebody owns shares of stock in your company, you do things that are in the interest of the shareholders. And if you want to use machines instead of people to make things, that's fine. You don't have to worry about the people who aren't being hired because they're not club members. Somebody else can hire them. But then other people say corporations have a social responsibility to do this, that, and the other thing. So you'll get a lot of that in your management and marketing classes, probably. And maybe in your econ classes. Now, we'll talk about it here because the authors talk about it. Okay, so again, planning, establishing goals, specify how goals will be achieved. Should we hire more people or should we work them overtime? Should we go overseas? The O word, right? Outsourcing. You've heard that, right? Is outsourcing bad? If you listen to people on TV, I think it's bad. But really, what did Adam Smith say in 1776? Perhaps you caught it on the news. Now, who is Adam Smith? He's called the father of economics because he wrote the first big book on economics. Other people were talking about pretty much everything that was in that book, except he's the first one who put it together as a book. So that's why he got the title Father of Economics. What he said is that you should do what you do best and trade for everything else. It's more efficient that way. It raises the standard of living for the vast majority of people. And so when we're talking about how goals should be achieved, part of that is, should you make it yourself or should you go to the outside? Outsourcing is one term for that. How many people in here made the clothes that you're wearing right now? Show of hands. Not too many. Why not? You outsourced. You're all a bunch of outsourcers. Have you ever thought about that? You're all a bunch of outsourcers. How do you feel about that? Well, you should feel good because you have good clothes. You couldn't make the clothes that you're wearing because you don't know how to do that. But somebody knows how to do that. And because of that, you have clothes now that are better than what you could make yourself. So you're going to say something?
No, I said so it's FSU, the school. Yeah, like the bookstore, the cafeteria.
Yeah, all that stuff. Yeah, you buy your food from the cafeteria. You don't make your own books. You buy them from the bookstore or Amazon or half.com or someplace, or McGraw-Hill. So, yes?
Then you become vulnerable when diplomatic relations don't go well and trade relations are bad, and then you become reliant. So do it yourself too. Or do what you do best and trade the rest to try to do everything yourself.
Yeah.
And then you can be behind the counter.
Yeah. Some people say that certain industries need to be protected, that we're getting a raw deal on trade. Maybe I'm quoting someone there. I mean, these arguments are not new. They've gone back to the days of Aristotle. Have you ever heard of him? No. He lived like 2,300 years ago in ancient Greece. He used to hang out around Athens. And his teacher was Plato. Maybe you heard of Plato?
Yeah.
And Plato's teacher was Socrates. Maybe you heard of him? No. Yeah, let me impress you with a little bit of information. I have read everything Socrates ever wrote in the original Greek. Are you impressed? I've read everything Socrates ever wrote in the original Greek. Gee, I'm smart. No, Socrates never wrote anything. That's a joke that only philosophers would laugh at. Socrates never wrote anything. The reason we know he existed is because his student Plato wrote a lot of stuff. And I don't read Greek anyway. So now you're not impressed. I should get my mouth shut. Yeah. So you can say the same thing. It's a good party opener. You know, if you want to start up a conversation, next time you go to a party, say, do you know? So you're not just learning accounting in this class, you're learning how to start a conversation at the next cocktail party you go to, or maybe not. Okay, let's go on to the next one. Budgeting. We're going to have a few chapters on budgeting. You know what that is, right? A budget. People have budgets here too. You try to spend less than what the cash flow that comes in, kind of thing. Controlling. Again, you want to control costs. For instance, the control function gathers feedback to ensure that plans are being followed. You know, if you think that certain things are being followed, you have policies and procedures, you have to check once in a while to make sure that they are being followed. And if they're not followed, you have to figure out why and maybe get them to follow the rules. Or if they're circumventing the rules because they found a better way to do something, that's good to know too. Maybe you can change the policy or procedure. Feedback in the form of performance reports. They compare actual results with the budget. Again, the budget are like estimated or projected numbers. And it could be dollar figures or it could be quantity. You know, we think we're going to make 10,000 units a month. We only made 9,800 this month. And so you compare the actual to the estimated, and that's either good news or bad news. If it's good news, we call it a favorable variance. If it's bad news, we call it an unfavorable variance. Seems we have one fatality already. Yeah, for those in cyberspace, someone just left. We had the first fatality. Maybe she decided to take econ instead. Turn on Windows Smart Chat. I don't want to do that. Maybe this will just go away. There we go. Again, feedback and the performance reports. Yeah, you have to compare what actually happened to what you thought would happen. So you have projections about revenues, about expenses, and so forth. You have to compare those to the actual numbers. And then you have to ask yourself the question, did we do well or did we do poorly? And what can we do to make things better next time? If our projection was off by 20%, we have to ask ourselves the question, why was it off by 20%? Was it the wrong estimates, or did something just happen, a sort of shock to the market that caused things to change? Decision making is another thing that management accountants do. It involves making a selection from competing alternatives, like what should we be selling? Reminds me, speaking of war stories, once upon a time, I had a conversation with this woman who was selling records. You know what they are, right? They're the little circular things, and they have grooves, and you play music on them. This dates me a little bit, and they were, in my parents' day, they were 78 RPMs, revolutions per minute. And then in my day, they were 45 or 33 RPMs. Well, she had this little store. She was selling records, and she couldn't make a profit because the store down the street was selling the same records for less money. It cost her, like, let's say $1 a unit or something. The store down the street was selling them for 85 cents. So she says, how can I make a profit selling records if my cost is $1 and the store down the street selling them for 85 cents? What would you recommend?
Find her source.
Yeah, find where that other company is getting their source, or don't sell records. If you can't sell something at a profit, don't sell that. Sell something else. Again, do what you do best and trade for everything else. And so what should we be selling? Sell the stuff that you can make a profit selling, either products or services. How do you know if you're making a profit? Well, that's where management accounting comes in. If the revenue per unit exceeds the cost per unit, it's profitable. But what if you only have 500 square feet to work with? Or what if you only have capacity to make 10,000 units a month or something? You should make whatever it is that gives you the highest bottom line profit. How do you know which item that is? Well, there's a way to figure that out. We're going to figure that out this semester. I'm trying to entice you now. Is it working?
Somewhat.
A little bit? Okay, somewhat. I'll settle for somewhat. Okay. Who should we be serving? That's the market. Who's going to buy this stuff? Well, sometimes they knock down your door to buy the stuff. That's what you're hoping for. But a lot of times you have to knock down their door. So who should we be serving? Well, we could serve this neighborhood, but I've heard that in the next town, there's nobody that provides this service, or nobody who sells this, or they sell it at too high of a price or something. Well, I've heard that in this other country, we can ship the stuff and we can still make a profit after we pay shipping costs. And so who do you serve? That could be a worldwide market, or it could be just another store in the next neighborhood. And how should we execute? Yeah, should we sell it over the internet? Should we go around with the sales staff knocking on doors? How many sales staff should we have? What products should we sell? If we have 5,000 products to sell, which ones should we push? We push the ones that make us the highest profit. How do we know what's the highest profit? Well, that's where management accounting comes in. The authors are pandering a little bit here. Managerial accounting activities for marketing majors. How many marketing majors in here? Show of hands. Okay, I won't hold that against you. No. Way back when, once upon a time, when I was working on a master's in taxation at DePaul University in Chicago, I never had an undergraduate marketing class. And there's a rule for AACSB schools, if you haven't had the Common Core, which included a marketing class, you have to take that. So I had to take an undergraduate marketing class, even though I didn't really care about marketing. I just only cared about taxes in those days. As soon as the marketing prof found out I was an accountant, he always referred to me as the bean counter. And I thought it was sort of humorous. So, I won't hold it against you that you like marketing better than accounting. Of course, there's always a chance I can convert you. Or not. That's okay. We need marketing people because we need beans to count. You have to sell the beans before we can count them, right? Yeah, so we're depending on you. So these are managerial accounting activities for marketing majors. Planning, how much should we budget for TV, print, and internet advertising? Let's say you have a $5 million advertising budget. How do you determine where to spend that money? How to spend it? Well, there are management accounting techniques that can help you to answer that question. How many salespeople should we plan to hire to serve a new territory? Well, management accounting can help you to answer that question as well. So you don't have to be an accounting major to benefit from accounting information. Managerial accounting is just information. It's a way to look at things. It's a way to answer questions that could add to your bottom line. Controlling is a budgeted price cut, increasing unit sales as expected. If we cut prices by 10%, can we increase sales by 30%? And is that a good thing? It depends on the relationship of fixed to variable costs. Do you remember fixed and variable costs? Yeah, okay. If not, that's okay. We're going to cover that in a few chapters. Are we accumulating too much inventory during the holiday shopping season? Well, you want to have enough inventory so that you don't run out. Because if you run out of inventory, they're going to go and buy it somewhere else. But if you have too much inventory, you're going to be stuck with it. And you're going to have to pay insurance on that. You're going to have to pay to store it. You're going to have to pay people to guard it. You're going to have to pay property taxes on it because just about every state charges property taxes on inventory. So what you want to do is minimize the amount of inventory you have without running out. If you run out, they call that a stock out. Stock is a British English word for inventory. So you don't want to run out, but you don't want to have too much either. And there are some little calculations you can do to figure out how much you need just to be sort of safe. You've probably all had at least one statistics course by now, right? One of your favorite classes, maybe? No, maybe not. Because accounting's your favorite, right? I thought so. No, maybe not. Or maybe marketing. Yeah, okay. Yeah, remember that bell-shaped curve and the 2 and 2.5 and 3 standard deviations, all that stuff? Yeah, if you're trying to avoid running out of inventory, there are certain little calculations you can do, and if you want to go out like 2.5 standard deviations, or like 95%, remember that 95% thing with the standard of plus minus 1, all that? Remember that? Yeah, you can use little calculations like that to figure out how much inventory you should keep on hand so that there's a 95% chance that you won't run out, or 99%, or 90%, whatever you choose. There's a certain amount of subjectivity there too. Decision making, should we sell our services as one bundle or sell them separately? Now let's say your service business, let's say you do computer geek kind of stuff. You sell computers, but you sell upgrades and you tweak stuff and you customize stuff and you can train staff as well if they need training. 5 things you could do. Should you just offer companies a package where we'll do all this for $50,000? Or should you give them separate prices for each item. Yeah, it depends. Yeah, that's the ultimate answer in accounting, by the way. It depends. Yeah, it depends on what you want to do. It depends on the fact situation and so forth. So, should we sell directly to customers or use a distributor? Again, that depends too. Yeah, you figure out what's the revenue stream coming in and what's the cost, or the revenue exit stream, I guess you could call it. And whichever one is more profitable is the way you go.
And sometimes it's done.
Yeah, yeah. In some markets, you could use one approach. Another market may be better to use another approach. Yeah, it depends on all kinds of things. If you go in a foreign country, you pretty much have to have some local person who's familiar with the market and the culture and all that. If you just, well, think about it. If you went into Japan and tried to sell stuff, you think you'd be successful? Or you should have a Japanese partner, someone who speaks the language, who knows how to sell the stuff based on the Japanese culture. Maybe
And the
starts off.
exchange rate, like you have to know also the value, like dollar versus.
Yeah, yeah, dollar versus Japanese yen, the exchange rates entered, all that stuff, shipping costs. So if you sell in foreign markets, you have to have some local people there who are familiar with the market, or else you're going to lose a lot of money. So all of those things are important as well. Oh, here we have some things for management majors. Managerial accounting activities. We were pandering to the management majors. How many management majors? Show of hands. Okay.
Yeah, come on, there.
You can raise, I won't hold it against you. I've made a lot of accounting majors into management majors over the years. That's an attempt at humor too. I guess that didn't work, huh? Okay. Planning, again, how many units should we plan to produce next period? It's partially dependent on how many you plan to sell and how many you already have in the warehouse. You know, how many units should we produce? It depends on how many you expect to sell and how many you already have. How much should we budget for next period's utility expense? These are all management questions. You can figure that out using management accounting techniques. Controlling, did we spend more or less than expected for the units we actually produced? If we think our price is going to be $10 a unit to produce or to purchase from the outside, and it was really $9.50 or $13 or something, how do we control costs? And there are some offsets there too. You can make stuff cheaply if you use cheap material or cheap labor. And should your goal always be to make high quality products?
No.
No, because the higher the quality, the higher the cost. There's a whole segment of the market who likes cheap stuff. They're willing to buy it at a low price. Perhaps you may even be wearing cheap stuff now. Right? Is anyone wearing a $900 silk shirt in here? If you are, you should be at Harvard or something. Yeah, $4. $4 works for me. Yeah. There are trade-offs. It's not necessary to make high-quality products. There's a certain end of the market that buys high-quality products. Most people buy moderately priced stuff. That's where the bulk of the market is. And so you should make high quality within a certain price range. You know, keeping the market in mind. Who's going to buy this stuff? How much are they going to be willing to pay? Are we achieving our goal of reducing the number of defects? Yeah, let's say we have a 1% defect rate now, which means 99 out of 100 units we make are good enough to sell. That means 1 out of 100 we have to throw out. Or if we sell them, somebody's going to ask for a refund. If we can spend an extra $50,000 to reduce that defect rate from 1% to 0.5% of 1%, should we spend the extra $50,000? And again, it's easier to ask those questions than it is to answer them. It depends. You know, what happens if we get fewer returns? Then we have more profitability. Are we going to make more than $50,000 by investing $50,000 to reduce the defect rate? Maybe. Again, these are all questions that have answers under management accounting. For decision making, should we buy a new piece of equipment or upgrade our existing machine? Let's say we can buy another machine for $100,000, or we can spend $30,000 just upgrading the machine we have. It seems like it would be better to spend $30,000 and just upgrade instead of buying a new one for $100,000. But what if I added another little bit of information that if we paid $100,000 for the new one, we could reduce our product cost by 20% because it's 20% more efficient to buy the new one than it is to repair the old one. What should we do then? Well, depends. I mean, we have to look at the numbers. We have to crunch them. But that's another thing we're going to learn in this course, how to answer questions like that. Should we redesign our manufacturing process to lower inventory levels? If we can cut the amount of inventory in the warehouse by 20%, we can maybe cut our rent by 20% if we rent warehouse space. We can cut our property taxes on inventory by 20%. We can cut our insurance costs by 20%. How much should we spend redesigning the process in order to save that 20%? Well, it depends. There's a break-even point there someplace, and we're going to learn how to calculate that. Am I whetting your appetite now? You want to crunch numbers? There's no numbers in chapter 1. Here's another set. Who are we pandering to now? Human resource management majors. How many of those do we have? None? Well, we all engage in that to a certain extent. Human resource management, hiring people, firing people, training people. Planning, how much would we plan to spend for occupational safety training? Good question. There may be a legal requirement to have some kind of a training depending on what industry you're in, what state you're in, and so forth. Should we spend just the minimum or should we spend more than that? I guess it depends on if you care about your employees. I'm just throw that out for your consideration. How much should we plan to spend on employee recruitment advertising? If you spend a lot, you'll have more applications and maybe you'll find some better employees. Do you need to find the best employees out there? This is a trick question, folks.
Not necessarily. I mean, some positions are so transient that no matter who you put in, it's only to last 30, 40 days. Some are positions, seasonal positions. Some of you, if you know whoever you're hiring, only last 60 days.
Yeah. If there's high turnover anyway. I read somewhere that McDonald's employees last an average of 4 months. I don't know if that's true. Is that true? Anyone work for McDonald's? High turnover? Yeah. If it's in an industry with high turnover, there's a different approach to advertising than if turnover is a lot less than that. So, and it depends too. If you're in engineering or something, you'd have a different approach to recruiting than if it's in fast food industry, for instance. So a lot of it's industry dependent and what level you're at too, high level employees versus entry level. For controlling, is our employee retention rate exceeding our goals? This is a sort of non-financial calculation. It's not a dollar kind of thing. It's retention rate. How many employees that we hired 5 years ago are still with us? That would be one measure. It doesn't involve dollars directly. It's just what percentage of those employees are still here. And if you have industry averages, you can compare your numbers to the industry average. And then if your number is different, you have to ask yourself why. If they're leaving faster from us than they are on average, why is that? What are we doing wrong? Yes?
We're talking from a training perspective. The training is dollars. And if you keep training, people really have a low retention rate, I should say. You're losing money per se in the long run. If you keep investing in training. Yeah. So in that case, it would be a dollar type association with control.
Yeah, there are dollars related to some of this. And for those in cyberspace, the question came up about training. Should you spend a lot of money on training or a little bit? Way back when I was thinking about being a tool and die maker, at one time, way back when, Erie, Pennsylvania, where I grew up, just south of the Canadian border. I used to shovel a lot of Canadian snow because it blew across Lake Erie and landed in my parents' driveway. But one of the largest employers in Erie at that time was General Electric. And they always had openings for tool and die makers because they couldn't get enough of them. And they had their own training program. So I had the option of going through their tool and die making program or going to college. And I decided to go to college instead. But it would have been not only a free education as a tool and die maker, but they actually paid you to go through it. But I heard some numbers like, I don't know if it was like 30 people in the class. And after they graduate, only 18 stay. The other 12 go to work for other people. So they get this free education, 12 of them leave. And so if you're paying money to educate all those people and 12 of them leave, that's like a waste of money, except you don't know which 12 are going to leave. But General Electric didn't look at it that way. They said, well, we have 18 new tool and die makers. It's a different way to look at things, right? You spend money to educate 30 people, 12 leave, 18 remain. So now you have 18 employees who are more marketable. You have to pay them more or else they'll leave, and maybe they'll work for the competitors or something. So this is something to consider too. You know, how much training should you give them? Some training doesn't cost much. Cross training, have you heard about that? Yeah, some bank management programs have that, where you work in one position for 3 months or 6 months or a year or something, and then they send you somewhere else to another part of the bank, and over a 5 or 10 year period, you learn a lot of different bank functions and you become a more valuable employee. And then maybe go and work for a competitor, maybe not, because banks are pretty much the same. Some banks would disagree with that. Are we meeting our goal of completing timely performance appraisals? This is another non-financial kind of thing. There are ways to measure performance. You can do it on a scale of 1 to 10 or 1 to 5 or something, different ways to do it, but there are ways to measure that. And accounting plays a role. Decision making, should we hire an on-site medical staff to lower our healthcare costs? Or should we outsource, meaning go down the street and hire somebody else? Should we hire temporary workers or full-time employees? What would influence that decision? Let's say that you're Hobby Lobby, and it's up to you to determine, should we hire full-time people or part-time people? Benefits, yeah, benefits. If you work less than a certain number of hours a week, they don't have to pay benefits. Yeah, how many hours is that? Does anyone know?
Like 20, less than.
Yeah, there are different federal rules on that. It depends on the benefit too. You know, less than 20 hours, less than 30, whatever. Once upon a time, my daughter, I have 2 of them, the actor daughter, she went to apply for a job at Hobby Lobby here in beautiful downtown Fayetteville. And they said, we haven't hired any full-timers for 3 years. And it was because of the recent changes in the healthcare plans and stuff like that. It costs a lot of money if you have to pay that. Thousands of dollars are added to the cost of employees. If they work more than a certain number of hours a week, you have to pay for their healthcare benefits. As a result, they don't hire full-timers anymore. They only hire part-timers. But it's hard to get 2 part-time jobs, 20 hours in each place, because you have to be available to work evenings, weekends, mornings, and so forth. So it creates some real structural imbalances, I guess is what an economist would call it. There's structural something, I forget the term. Structural imbalances, impediments, structural impediments, because of things like that that interfere with the market process. But those are things that you might have to consider.
Temporary can also be a good way to be like a prolonged probationary period before deciding to like fully onboard.
Yeah, some companies have a probationary period. Yeah, 90 days or whatever. In the European Union, they have some rules. I think in France, if you're employed for 1 year as a full-time employee, it's almost impossible to fire you. And because of that, they don't hire people for a year. They hire them for a shorter period, or they fire them after 11.5 months or something. And that has effects on the marketplace too. So, yes?
Also, like seasonal, like Christmas season or like construction, you know,
Yeah.
especially like when you say you were born where you lived at, can't work in the snow per se in construction.
Yeah. Yeah, I used to make money shoveling snow. It was nice. I'd shovel the neighbor's driveway. Sometimes I'd shovel the same driveway twice in the same day because it would just keep snowing and it would blow and it would drift. I got like $1 a driveway. This is back in 1957, 58. You remember then, right? No? Okay. I'm dating myself here a little bit. Yeah, I used to mow lawns too, 50 cents for the front yard, 75 for the back if it was a larger backyard. Yeah, I used my father's gasoline to do it, so I didn't have any product cost, and I used his lawnmower, and he let me get away with that. So, yeah. All I had to do was inhale the fumes. Yeah. So what else was I going to say? Temporary versus, yeah, it'll come to me. I have a virtual plethora of little stories to tell. and they'll come up through the semester, from time to time. Temporary, there's a lot of stuff going on in the European Union that makes like arterial sclerosis of the economy, so to speak. A lot of imperfections that increase the cost of hiring people, and that's passed on in the form of higher prices, lower profit margins, and so forth. But not just in Western Europe, but they have a lot of good examples in Western Europe. Oh, accounting majors, what everyone is going to be by the time you leave this class, right? What do they have to say about accounting majors? Many accounting graduates begin working for public accounting firms. However, most leave at some point to work in other organizations. Perhaps you've heard of this, right? That they have these big four accounting firms. The reason they call them big four is because if you look at their annual revenues, it's so much larger, the top four, than any of the other firms. They call them the big four. But there are thousands of other smaller accounting firms too. And a lot of accounting majors, when they graduate, they start working for these accounting firms. And it's a great place to get experience, especially if you're in auditing or tax or something, because you go around to dozens of different companies and you see how they do things. And you'll notice that they all do it a little differently, but they have certain common features. And if you stay with one of these firms for a few years, you get to learn a lot of good accounting. It makes you more marketable, so that if you get tired of doing that, you can go and work for another company and work fewer hours with less stress and still make a good salary, and you'll know a lot of stuff because you'll know how 20 or 30 or 50 different companies keep their books. The IMA, that's the Institute for Management Accountants. It's the largest group of management accountants in the world. At one time, they had 80,000 members. They're at exit 172 of the Garden State Parkway, by the way, if you want to pay them a visit. Maybe not. Where is the Garden State Parkway anyway? It's in New Jersey. New Jersey, exit 172. Yeah, I used to work there. I was a manager of accounting practices once upon a time, about 100 years ago. They used to be on 3rd Avenue and 47th Street, but then they moved to New Jersey so they could save a whole bunch of money on rent. Yeah. Have you heard of AICPA? American Institute of Certified Public Accountants? They used to be at 1211 Avenue of the Americas, like 47th, 48th Street, and 6th Avenue. And they still have an office there, but they moved most of their stuff to New Jersey because when their rent came up for renewal, they could save $35 million by moving to New Jersey. Would you move to New Jersey for $35 million? Yeah, most people would. Not all of them, but some would. So anyway, the IMA moved to New Jersey for the same reason. They didn't save $35 million, but they saved something. They estimate that 80% of the professional accountants in the United States work in non-public accounting environments. So that would be like corporations, partnerships, nonprofit organizations, hospitals and so forth.
They still have like, I think like sales tax, like free sales tax.
Yeah, in Secaucus, New Jersey, you can buy clothes with no sales tax. Yeah. And so what the people from New York do is they drive. In New York, used to be a little over 9% sales tax. I don't know what it is now, but people used to come from New York and do their shopping in New Jersey, maybe see a movie, and the New York tax officials would go to these shopping malls and take the license numbers of these cars, but they didn't know what to do with the information. Because if you buy stuff in New Jersey and you bring it back to New York, you're supposed to pay a use tax that's equivalent to the sales tax, but nobody ever pays. There's a spot on the tax return, the New York State tax return for that, where you have to declare it, but almost nobody pays it. They didn't know what to do with all that license plate information, but they were losing a lot of money because in New Jersey, in certain places, you can buy clothes with no sales tax.
But New York started doing, if you buy like 100, less than like from up to 100 is no sales tax. So people will do, if they have like stuff worth more than 100, they'll separate like different, like, okay, if you got $400 worth of merchandise, they'll pay like 100 this time and then bring it up this time and then bring this one and just so they don't pay.
Yeah, yeah. For those in cyberspace, we're having
money. Everybody started going to Germany, so in order to bring them back, they started doing.
Yeah, and when Giuliani was mayor of New York, he even had tax holidays where certain days you wouldn't pay a tax. So everybody held off. They didn't purchase things Monday, Tuesday, and Wednesday so they could, so sales dropped, and then they just bought the stuff tax-free. Yeah. Yeah. So, let's see, there was another little joke there that I missed. It'll come up. There's lots of, there's ways. Once upon a time, I worked for this company in Chicago, and in the tax department. And, Chicago is very close to Indiana. You just point east and drive for a half hour or so, and you're in Indiana, depending on what part of Chicago you were in. And it was a company that produced consumer products, and they had to pay a property tax on their inventory. And each year the tax day was different. Let's say that on June 30th, you had to pay a property tax on all your inventory that was within the state of Illinois. And so what they would do as that tax date approached, June 30th or whatever it was that year, they would put stuff on boxcars, move it a few miles east until it crossed the Indiana border, and then they didn't have to pay the Illinois sales tax or property tax. I mean, but then eventually, and this is the thing that went on in all the states had these tax dates, but eventually the state policymakers caught up with that. Now they don't announce what the tax date is until after that date is passed. So they say, well, the tax date was June 30th. Now it's July 15th. So what was in state then you have to pay a tax on. So it's possible that you could pay a tax on the same property if it moved from state to state. If you're in the wrong state at the wrong time, you could pay the property tax in 2 states. So, but that's called tax avoidance, not tax evasion. And tax evasion is you break the law. Tax avoidance is you plan your activities so as to minimize taxes. So, is that ethical? I'll throw that out for your consideration. Some people say yes, some people say no. If your duty is to the shareholders, it's ethical because you're reducing their costs, increasing the bottom line. But some people disagree. Yeah. Certified management accountant. This is like a CPA, only it's for management accountants. CPA, certified public accountant, is intended for people who work in the public accounting industry. Those are accounting firms that go around and have clients. They audit the books of other clients, check the taxes, and so forth. And way back when, like before 1974, when the CMA first came into existence, accountants who they got their accounting degree and they went to work for a corporation. They never went to work for a CPA firm, some of them. And they were at a competitive disadvantage because in those days, in order to get the CPA, certified public accountant, you had to work for a CPA firm for a while and accumulate experience. So if you went to work for a corporation, you never got that experience and you weren't certified. And so you were discriminated against in the marketplace because of the perception that you were a second-rate accountant. And there might have been some truth to that. But in 1974, the Institute of Management Accountants started their own exam, the CMA exam, to get rid of that marketplace discrimination. They tried to make it the equivalent of the CPA. And it's almost the equivalent, but not quite. So it's a way to minimize workplace discrimination because of the perception that you're a second-class accountant. And some places, especially corporations, they'll hire a CPA or a CMA as if they were equivalent. Usually the people who hire them are the ones that have the CMA instead of the CPA. There's a lot of overlap between the exams. When I teach accounting majors, I urge them to take both because if you're going to study for the CPA exam, you can probably pass 80% of the CMA exam without any additional study because there's a lot of overlap. We don't have to go into the CMA exam stuff, do we? Everybody's going to take it eventually, so you can learn about it later. No? Okay. Just, it used to be 5 parts when I took it. Now it's 2 parts, but it includes the same topics. It's just that it's 2 parts now instead of 5. An ethics perspective, if you want to talk about ethics, management accountants, the IMA, Institute of Management Accountants, they have a set of ethical standards for management accountants. And they serve as good guidelines, but a lot of times they're pretty general. You're not supposed to lie, cheat, or steal, basically. Well, it's a little more complicated than that. They help you to resolve ethical conflicts. Competence is one of those. If you're not competent to do a certain thing, you're supposed to tell the boss, I can't do this. That's the ethical thing to do. I've used that a couple of times to get out of job assignments I didn't want. I can't do this. I can't do a good job on this. You should get him to do it instead. It's in the code of ethics. You can use it as an excuse. So competence, recognize and communicate professional limitations that preclude responsible judgment. Maintain professional competence. You should continue your education either officially or unofficially. They have all kinds of educational things you can go to. You can do things online to maintain and improve because things change in accounting sometimes. Follow applicable laws, regulations, and standards. Provide accurate, clear, concise, and timely decisions, support information. These are all things that are under competence. And confidentiality, you're not supposed to disclose confidential information unless you have to by law, basically. No leaks. Integrity, mitigate conflicts of interest. Sometimes there's a conflict of interest. You have to tell the relevant person if there is a conflict of interest and advise others of potential conflicts. Like if you work for a CPA firm and you do audits, for instance, the employer makes you list all the companies that you own an interest in. You know, if you own shares in IBM Corporation, you can't audit IBM, that kind of thing. So if you don't want to audit IBM, what do? Buy a few shares. Not to be cynical, but they could tell you to sell the shares if they really want you on the audit. Refrain from conduct that would prejudice carrying out duties ethically. Abstain from activities that might discredit the profession. There's a whole thing about that, not only in management accounting, but in the AICPA, American Institute of Certified Public Accountants. They have ethical rules as well. I hesitate to call them ethical standards because during the 1960s, they had a big book, big thick book on ethical standards. A lot of that stuff got kicked out by court cases because it violated antitrust laws. It violated the right of free speech and free press. I remember Rampell versus Florida Board of CPAs or something like that. Mr. Rampell, who was a Florida CPA, he gave his business card to someone at a party, but the person hadn't asked for the card. They didn't say, oh, please give me your card. They didn't do that. He just gave it to him. He was soliciting business. In the old days, that was considered an unethical practice. Really, it was a market impediment because it increased competition, and the people who made the rules didn't want to increase competition. And so they made this ethical rule that said that it was an unethical practice to give your business card to someone who didn't ask for it. And they wanted to fine him $100 or $200 or something, but he had principles. He says, no, I'm not going to pay the fine. I'm going to take you to court. I have the right to free speech. Here's my card. That's my speech. And he took him to court, and the appellate court of, I think it was Florida, or maybe it was the federal district court or something, one of those courts. They said that that rule violates the Constitution, the First Amendment of the Constitution. And if you go through the Code of Ethics, AICPA Code of Ethics from the 1960s, you'll see a lot of stuff was crossed out because of court cases like that. It used to be that if you were a CPA, you could not put CPA on your license plate because that was considered advertising and it was a discredit to the profession. That got kicked out for being a free speech thing. And so just because something is in a code of conduct doesn't mean it's ethical. It could be that they're trying to protect their own business from competition or something. So I just mentioned that because they talk about ethics, but some of the stuff they did in the 60s wasn't ethical. And it's not just the accounting profession. You can find that in a lot of professions. IMA guidelines for ethical behavior, credibility. Yeah, you should communicate information fairly and objectively. Again, you don't just tell half of the information. You have to disclose things that they might not know about. But let's say you're a real estate agent and you're selling houses. Should you disclose the fact that the house is haunted? If you believe that houses can be haunted. So, yeah. But then the price goes down, right? Should you disclose it anyway? Yeah. What if somebody was murdered in the house? Should you disclose that? Yes, no. If it's haunted, yes, but if it's just a murder, maybe not, or maybe the neighbors will tell after the closing. Should you get your money back then? I throw these things out. Sometimes these ethical decisions are not always easy to resolve. Should you? Yeah. Yeah, what if the person you sell it to doesn't believe in ghosts? Then it's okay, right? Yeah. Oh, they say it's haunted, but you don't believe in ghosts. Yeah, here's the house. And then they see the ghost. I don't know. Those are all ethical questions, Disclose all relevant information that could influence a user's understanding of reports and recommendations. If you're not a sophisticated financial statement reader, and there may be one or two of you in this very class who are not sophisticated financial statement readers, you as an accountant have to disclose certain things or point out certain things that they should be looking at. I mean, there are limits to that. You don't want to give them a whole lecture on accounting. But on the other hand, if you know something that you know that they don't know that they should know, you should probably mention that. Maybe explain. Again, all of these ethical rules are not cut and dry. There's a little wiggle room, as they say. Guidelines for resolution of an ethical conflict. You notice we haven't crunched any numbers. The rest of this course is going to be about number crunching, but today's course isn't. Follow employers' established policies if they have established policies, and they should. For an unresolved ethical conflict, discuss the conflict with your immediate supervisor or the next highest uninvolved managerial level. There's a whole bunch of rules here. We don't necessarily have to go into all of them. And again, you can read them. Clarify relevant ethical issues, consult an attorney regarding legal responsibilities. Sometimes there's a difference between legal responsibilities and ethical responsibilities, right? Can anyone give me an example? You have a legal responsibility to do something or not do something, but the ethical thing is different.
I guess if you're not a family member that was represented by the same attorney, that attorney has a responsibility to tell you that he does as your family member, you're that family member in the court against you.
Yeah. If an attorney is representing someone and it's a conflict of interest, then they have a duty to disclose that. Or in the case of some things going on in Washington, they have a duty to recuse themselves so that they don't get involved with certain things that they might have been involved in before. You've heard that, recuse. Somebody in Washington recently did that, and some people got upset with them.
Land contamination, like if you sign a non-disclosure with the company, legally you're bound to not talk about the business operations or anything, but then ethically you might know that perhaps you are contaminating the land more than the society would enjoy.
Yeah, you might have to sign a non-disclosure agreement as part of your employment agreement, and maybe you have an ethical duty to disclose something. In the case of land pollution would be one, or if a company is doing something that's illegal and you signed a non-disclosure agreement, you may have an ethical duty to disclose certain things that are maybe illegal.
Like the emissions, was it Volkswagen?
Yeah, the emissions in the Volkswagen.
It wasn't just one person who knew that they had that trigger, release, whatever it was.
Yeah.
It was a whole slew of assembly line workers knowing that was going on.
Yeah, the Volkswagen thing. For those in cyberspace, the Volkswagen, they had some regulations. They had a defect, and there was a liability, a moral liability to disclose, which brings to another thing. Speaking of microeconomic analysis, cost benefit. You've heard about that, right? Cost benefit. One of the auto companies, I forget which one it was, General Motors or Ford, I think, one of those. They found it within the last 10 years. That's by my standards, 2008. Yeah, there was a defect in one of their products, and the defect would cause cars to crash sometimes, and maybe people would get killed. And so what these economists did was they estimated how much it would cost to fix the defect. They estimated how much they would lose in lawsuits if they didn't fix the defect. And they came to the conclusion we shouldn't fix the defect because it's cheaper to just pay off a few lawsuits for dead people. That's economic analysis at its best, right? Or is it at its worst? That's called utilitarian ethics, by the way. Utilitarian ethics, where you just compare winners and losers. If the winners exceed the losers, or if the total good exceeds the total bad, then you do it. That's utilitarian ethics. Some people would criticize that, including me, but it's just me. Well, it's not just me, it's a bunch of other people too. But I throw that out because utilitarian ethics is ethics. That's one way of ethics. But that's not the only kind. There are other ethical systems and so forth, which we'll discuss a little bit. This is going to be mostly a number crunching course, but once in a while I'll put other stuff in to make it even more exciting than it otherwise would be. Crunch, crunch. Why have ethical standards? We don't need to deal with that. We can strategic management perspective, game plan. Okay, what else do we have? Customer value propositions. Yeah, all this stuff. Again, you can read this. Enterprise risk management. Here we go. Should I try to avoid the risk, accept the risk, or reduce the risk? Again, it's a cost-benefit analysis. It's involved. Again, some people get hurt if you don't replace a defect or something. A process used by a company to proactively identify and manage risk rather than just wait until you find a defective unit. You can maybe look for defects. That's usually a good thing to do anyway, because in the long run, you'll cut costs by doing that, possibly. Once a company identifies its risks, perhaps the most common risk management tactic is to reduce risks by implementing specific controls. That's where the controlling part of management accounting comes in. And here are some examples of business risk and examples of controls to reduce those risks. Products harming consumers, like that automobile case, for instance. You can develop a formal and rigorous new product testing program. Of course, if you test things, you don't always catch everything. Like once upon a time, when I lived in Ohio, it was the Lordstown General, assembly plant. Does anyone know where Lordstown, Ohio is? It's just down the road from Warren, Ohio. That's about 70 miles southeast of Cleveland. I used to live in this place just down the road from Lordstown. I used to play in this band on weekends in the local bars. And some of the auto workers would tell me what they did during the week. And one thing they did was, in the old days, you had these wheel covers. Before you had wheel covers, they had nuts and bolts on the tires. They still do, but they had 5 nuts that you put on the tire to make sure that the tire doesn't fall off. They only put on 4 of the 5 nuts, and they put a wheel cover over that so nobody could see. And they all passed inspection, and they got a big charge out of that. They just wanted to put on 4 nuts instead of 5 to see if they would pass. That's United Auto Workers at their best. And then another thing they do, on the doors, the door jamb, between the outer door and the inner door, there's airspace in there. They would put a beer can in there. You shouldn't be drinking beer while you're assembling cars, but they did. They put the empty beer cans in there just to see if they would pass inspection. Because when you drive them off the assembly line, you're supposed to drive them off at 3 miles an hour, and the beer cans didn't start rattling until like 5 or 6 miles an hour. And so they would always pass inspection. But then when they go to the auto dealers, somebody would drive it and they'd say, "Oh, I hear a rattle. What is that?" Well, it's a beer can in the door jamb. And that's United Auto Workers trying to circumvent these rigorous testing programs. So there are ways to get around them. They make a game of it sometimes. And that's why I don't buy Fords and Chevys. Plus, I had bad experience with them. But that's like a whole other story. And that was back in the 70s. Maybe things have changed. I don't know. Well, the Lordstown assembly plant was shut down. That's what's changed. But that's another thing. Losing market share due to unforeseen actions of competitors. How do you control that? Well, develop an approach for legally gathering information about competitors' plans and practices. It's like spying on your competitors, but doing it legally. You can do that by just picking information off the internet, right? But if you hack into their computer system, that's bad. I'm just saying that in case you didn't know. Companies don't do that, do they? Oh, okay. That's like stealing information. If it's publicly available information that you just assemble and you crunch the numbers, that's okay. But if you steal it from their computers, that's not okay. Well, there's a whole bunch of things there. We don't have to go through all of those, but you can read them. Again, corporate responsibility or social responsibility. The opinions in these slides are the opinions of the authors and a bunch of other people, but there are a bunch of other people who disagree with some of these things. So it makes for a good cocktail conversation. Again, Milton Friedman said that the only responsibility of business is to make profits within the rules. Again, you don't lie, cheat, or steal, but you don't have any responsibility to the neighborhood to hire local people if you can find foreigners to do a better job cheaper. According to Friedman, not just Friedman, but a lot of economists too, other people would disagree with that. Corporate social responsibility is a concept whereby organizations consider the needs of all stakeholders when making decisions. Customers, well, you have to give customers what they pay for. Do you have to give customers good products? Only if they expect good products. Yeah, yeah, the dollar store, you give them what the dollar store sells. You don't have to give them good products if they don't expect good products. Yeah, perceived value, yeah, you give them their money's worth, whatever that is. So customers, employees, you pay them on time. You pay them whatever you agree on, which could be a low wage, but if it's too low, they'll go somewhere else. If you pay them more than the market, they won't leave. So if you don't have any turnover, it's because you're probably overpaying them or something. Not to be cynical. Suppliers, again, you have good relations with suppliers. You don't lie, cheat, or steal. You do what you say you're going to do and so forth. The local communities, you don't pollute them too much. Too much, how much is too much? I don't know. Stockholders. Yeah, there are federal mandates on that. Yeah, if you follow the federal rules, you don't really have a choice. You just have to follow certain things. A certain amount of pollution is okay because the atmosphere can absorb a certain amount. Like Pittsburgh, it used to be in the 60s when they had a lot of steel mills that you had to bring in an extra shirt to work and change it in the afternoon because the first one would be all gray by the time lunch was over. But then that changed and they cleaned it up, and it actually became one of America's cleanest cities after the steel mills closed. So there's a certain trade-off there. Corporate social responsibility extends beyond legal compliance to include voluntary actions that satisfy stakeholder expectations. So you don't have to do just the legal stuff. You could do more than meet legal minimum requirements. Again, when you do that, though, it costs you money. And how much money should you spend to go beyond doing just what you have to do? You're taking money out of the shareholders' pockets to do that, right? Is that a provocative statement? Am I being serious here? Sometimes you don't know, right? Yeah, if you do something to clean up the environment and you advertise it, some people will buy your product because they say, oh, they're being socially responsible. So there are advertising benefits if you just exploit them. Yeah. What else? Examples of corporate social responsibility. Whenever you see the word should, that's somebody's opinion. You see the word should up there? It's a very second sentence, right? Companies should provide customers with. This is somebody's opinion, and there could be disagreements. Companies should provide customers with safe, high-quality products that are fairly priced. Well, to provide a safe product, you have to invest more. Would some customers buy stuff that's not quite safe, but sort of safe? Yeah, there's a certain trade-off between price and safety. You're willing to put up with a little more risk if you can save $5,000. If you had a choice of buying a car made out of plastic or a car made out of steel, you'd rather have a car made out of steel because it's safer on impact, right? But a car that's made out of plastic gets better gas mileage. So you're saving a few bucks on gas, but if you have an accident, maybe you'll get crunched. Have any studies been done on that? Of course, or I wouldn't have mentioned it, right? Some economists somewhere, I forget where, did a study and they estimated a certain number of people died because of these gasoline standards, these pollution standards. In order to meet the standards, You have to make cars out of thinner metal, or you don't make them out of metal, you make them out of plastic. And then you get better gas mileage, and there's less pollution, but more people die in the case of accidents. And some economists estimated that, I don't know, 10 or 20 or 30,000 people, I don't know what it was, some people, some number died because of those federal regulations. So federal regulations do kill sometimes. And some economists came up with a number for that using certain estimates. So I throw that out for your consideration. That's a form of management accounting too, except it's done by microeconomists. Are microeconomists small little economists? I throw that out for your consideration. Again, there's a trade-off between safety and price. High quality products, we already discussed that. There's the low end of the market where you buy low quality stuff for low prices. A lot of people like that stuff. So there's nothing wrong with making low quality stuff as long as the people who buy it know that it's low quality. Competent, courteous, and rapid delivery of products and services. Again, you want it to be rapid, but there's a cost there too, right? You ever have the option of buying something with overnight delivery for $30 or get it in 6 to 10 business days for free or for $3 or something? Those are trade-offs too. Full disclosure of product-related risks. You ever buy a drug where it has a 1-paragraph description of the drug and 3 pages of the bad things that could happen if you take it? You know, they try to cover everything there. Companies should provide suppliers with, again, fair contract terms. What's fair? It's whatever people agree on, I guess, right? Unless one side has more bargaining power than the other. Let's say you're McDonald's and you're going into Idaho. What's Idaho known for? Potatoes, yeah. You're a McDonald's representative. You want to buy all the potatoes in eastern Idaho. And you're willing to pay, you'll buy 100% of that guy's crop. How much bargaining power do you have as a McDonald's rep? Probably a lot, right? The farmer doesn't have to worry. 100% of his crop is pre-sold before he even plants the potato seeds. So, but you have more bargaining power as a McDonald's rep because you can offer a lower price. And so again, it's a voluntary exchange. Companies should provide stockholders with competent management, easy access to complete and accurate financial information, like financial statements that have been audited if you're a publicly traded company, or maybe even if you're not. Publicly traded companies have to be audited every year by an independent accounting firm. If you're privately held, you don't have to be audited, but maybe it's a good idea anyway. Depends. Full disclosure of enterprise risks, honest answers to knowledgeable questions, and so forth. Again, we don't have to go through all of that, but sometimes there's more than one way to look at some of these things. Oh, like companies should provide communities with payment of fair taxes. Now, what is a fair tax? You've heard about people paying their fair share or not their fair share or something like that. Yeah, proportionate might be fair. Should we have a flat tax or should we have a graduated tax where rich people pay a higher percentage? That's a rhetorical question. You don't have to answer that. Yeah, Karl Marx, you've heard of him, right? Said we should have a high progressive tax to destroy the free enterprise system. So that's, Karl Marx advocated that. So I'll just throw that out for your consideration. Honest people can disagree on some of these things. Process management, a business process is a series of steps that are followed in order to carry out some task in a business, like R&D. What's that stand for? Research and development, right? Some industries have a lot of that, like pharmaceuticals, for instance. You have to spend billions of dollars a year on these high-priced scientists so they can come up with drugs that you can sell. A lot of research and development in pharmaceuticals and some other industries. Product design a safer product, design a product that's more appealing, design a product that costs less. Then you have manufacturing, marketing, distribution, all that stuff, customer service. These are all part of the process.
Did you hear about the medicine? It was on the news about like the ginseng and like Walmart, CVS. Yeah, like the diet supplements, all those stuff they claim, or I think GNC also sells some stuff. They're not included in the actual pills, like whatever they claim it's supposed to do to you, it's not even in the pill.
Oh. I hadn't heard that. Yeah.
Yeah. It was I think last week.
Oh.
And they were, you know, like Walmart, they said they were going to pull it off the shelf, but GNC, they said they stand behind them. It depends.
Yeah, stand behind, hide behind them.
Responsibility from one
Yeah.
company.
Yeah, for those in cyberspace, so we're having an interesting conversation here about GNC and other companies that say they have stuff in the product, but they really don't. That's sort of prima facie unethical and probably illegal too.
Yeah.
So, yeah, both federal and state. Now, if you're an attorney and you see that, the first thing you want to do is have a class action lawsuit, which we can have in the United States, but in some other countries, they don't have class action lawsuits. It's good to be an attorney in the United States. There's profit opportunities here that you can't find in a lot of other countries.
In some cases, you can't in military. You can't like sue a PA or a clinic. You can't do a class action.
Yeah.
Yeah, because it's just an accepted risk. Part of serving is this is the care we provide, and sorry today.
Yeah. Yeah, well, different rules, military lawyers. But in the United States, they have one system it's different than most systems in other countries. In other countries, the loser pays the legal fees for both sides. But in the United States, you can, there's like a whole industry, they call them plaintiff's attorneys or ambulance chasers, where, and you see these things on late night TV. You know, if you were injured, you know, come and see us. If we don't win, you don't have to pay anything. What they don't say is that if we do win, we get a third. And so for those tobacco lawyers from like a generation ago, that they won like billions of dollars in settlement and they got a third of it. It's a wonder they didn't just retire, but they continued to be in business. I mean, you know, if you can make $1 billion for working hard for a year, do you want to stop or do you want to try and do it again? You know, well, after tax, $1 billion is only like 600 million by the time you get done with it. So yeah, it's a big chunk. So you have to make up for that, right? Or not, I don't know. Maybe I'm being cynical again, I don't know. But, so I just throw these out, you know, for your consideration. Lean products, we don't have to go through. This is like an undergraduate slide, but basically it's a process. You know, customer places an order, and then you create a production order, and it generates blah, 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 all that. And there's arrows, nice red, multicolored things here. Then traditional manufacturing, and they have others. It used to be considered non-traditional manufacturing, like just in time. Have you heard of that? JIT, just in time. Yeah, you don't make something until right before you need it. Like General Motors doesn't make its own mufflers. There's a place a couple miles down the street from the General Motors assembly plant in wherever it is, Dearborn, Michigan, or someplace, wherever the assembly plant is. They make mufflers. So if General Motors needs 200 mufflers in 4 hours, they just tell this place it's 2 miles down the road, we need 200 mufflers in 4 hours. So they deliver them after like 3.5 hours. That's called just in time. They get them just before they have to put them on the cars in the assembly line. The nice thing about that is General Motors doesn't have to keep a bunch of mufflers in its inventory because that costs money. And they have to pay property tax on that. And they have to pay storage costs. They have to pay people to guard the stuff so it doesn't disappear. They have to pay, yeah, taxes on capital, all that stuff. And so that's the good news. They can reduce inventory costs. The bad news is if there's a glitch, let's say there's a big snowstorm in Michigan and the muffler company can't get its semis to the General Motors plant, you have to shut down the whole assembly line because they can't put the mufflers on the car. And so there's a bit of a trade-off there. Yeah, that's a system that became popular in Japan first before it became popular in the United States. So I just throw that out to internationalize the course. Lean production is part of that. So. And management accounting techniques can be used to sort of fine tune this stuff.
Japan saw a lot of like process improvement with Toyota, the just in time. I mean, they're just like little tiny guys figuring things out how to do things quicker.
Yeah, yeah, if you can cut a few seconds off of the production line. And there was, what was it? I think it was Rockefeller, the first one, John D. Rockefeller, the big oil guy. When the oil was being like harvested and processed and they put it in cans, they had to solder the cans because, you know, you had the can, you had the top and the bottom, and you have to make the cans so they don't leak. And so they put solder in there, spelled S-O-L-D-E-R, the L is silent. But how much solder do you put in there? Well, 23 drops, let's say. If you put in 23 drops, the cans would never leak. So Rockefeller said, how many drops could we put in and still have it not leak? And he said, well, try 15, and a few of them leaked. He said, try 20, and maybe some of them leaked. Try 21, none of them leaked. So instead of doing 23 drops of solder, he did 21. So 2 out of 21 is like 1 out of 10. He saved 10% on the soldering costs by just doing that little market test. Minor improvements, tweaking. You know, most improvements aren't revolutionary. Most changes are a little bit here, a little there, 21 drops instead of 23. And over a period of time, Japanese companies are known for that. They try to always have continuous product improvement so that if you tweak a little here, tweak a little there, after a period of a generation or even 5 years, product costs go down. They can either pass that on to the consumers in the form of lower prices, or they can keep the extra profits, or some combination of the two. Theory of constraints, also called a bottleneck, like a traffic jam. You know, if you're on a highway, 6 lanes, and all of a sudden it's 4 or 3 lanes, that's like a bottleneck. They have that in management accounting as well, and that slows down the production process. And so you focus on the bottlenecks to try to eliminate them or reduce them. That's basically what it means. Theory of constraints. It's the bottleneck that's constraining production or whatever. And there's a chapter on how to crunch numbers for that as well. There's the bottles in the bottleneck. Only actions that strengthen the weakest link in the chain. You've heard this before, right? About the, what do they say about the weakest link in the chain? Is there a,
Yes, what the saying is?
the saying, yeah.
You know, the strongest, the weakest link in the chain, Justin?
Yeah, a chain is only as strong as its weakest link, right? A chain is only as strong as its weakest link. And in accounting, we call these, you know, theories, or microeconomics, theory of constraints, or in management accounting, a bottleneck. Now, we look at the weakest link in the chain and we try and strengthen it. We try and eliminate or reduce the bottleneck to make production more efficient. Measurement skills. A good manager complements an understanding of strategy, risks, and business processes with data-driven analysis. Again, it's number crunching. I have to go through all these. 6 skills of an effective leader. This is more management than it is accounting, but management accounting is management as well as accounting. Technical competence, high integrity. Sometimes high integrity gets in the way, not to be cynical, or maybe to be cynical. Understand how to implement organizational change. Some people don't want to change. You know, you've heard the term, if it ain't broke, you don't fix it. That kind of philosophy led to the decline and fall of the British Empire. Were you aware of that? Well, there were some other things involved, but the British tool makers used to be the most efficient tool makers in the world. You know, these looms that they used to make fabrics and clothes and stuff, and machinery, heavy machinery, light machinery. Brits used to be the best. They made machines that would never break down. If you replaced a part once in a while, kept it well greased, well oiled, the machines would last for 70 years. And so they lasted for 70 years. The problem was the Germans and the Americans made machines that were more efficient. Let's say that the British machine would produce something at $10 a unit, and the German or the American machine would do it for $7 a unit. The British never replaced their machines because they were paid for them because they continued to work. But they became uncompetitive because their machines would produce something that cost them $10 a unit, and the Germans and the Americans would produce a better product for $7 a unit. And so the British should have just scrapped their machines and bought new stuff, but they didn't because it wasn't broke. They didn't fix it. And so that's a great example of how that, if it ain't broke, don't fix it, is a theory that you should throw out the window. And it's the same with production processes. Now, just because something works doesn't mean it can't be improved or replaced. Okay, so that's it for the slides. Let's take a look at, we don't really have numbers to crunch in this one, but we do have some solutions. These are the solutions that are posted on Canvas. I gave you the solutions to all these questions as well, even though they're not listed as homework, because it's a good way to review the chapter. If you go through the questions at the end of the chapter, here are the answers. So you should
take the questions at the end, there's 1-1, -1, 2.
Yeah, same exact things. And so what you should do, read the chapter first, then read those questions. Like I'm looking now at page 18. I guess this is where the first one is. At the bottom there, questions. How does managerial accounting differ from financial? Does it answer that? Yeah. Financial accounting is concerned with blah, blah, blah. So by the time you get done reading the chapter and then reading the answers to all these questions, it's like you read the chapter and reviewed it. And then if you do the slides, it's like doing it 3 times. By the time you do that, you're ready to answer the questions that are like the homework questions. Now, the first homework question I have is number 1 on page 19. This is about planning and controlling. I don't want to read through all this. I guess I have to, huh?
Wait, which one?
The first one, number 19, exercise 1-1.
Planning and control.
Yeah, planning and control. Some of this stuff is just common sense. Well, the nice thing about management accounting is it's really all common sense. It's just sometimes you can't see the sense. But at least, you know, with financial accounting, there's a bunch of rules. And you may not understand why the rules are the way they are. There are reasons for them, but you don't have to know them necessarily if you just know the rules. With management accounting, a lot of this stuff you can just think through. Oh yeah, that's logical. So a nice thing about management accounting, it's logical. Financial accounting, people make the rules and it's sometimes a series of compromises. You know, if there could be 5 ways to report a certain transaction, nobody can agree on which one is best. They may choose the second best way just so they can get a consensus. That's what financial accounting is all about. And so sometimes the management accounting or the financial accounting rules are not the best because they're the result of compromise sometimes. Whereas, yeah, for management accounting, the only rule is give the boss the information he or she wants. That's the rule, pretty much. So the first one, planning and control. Many companies use budgets for 3 purposes. First, they use them to plan how to deploy resources to best serve customers. Second, they use them to establish challenging goals or stretch targets to motivate employees to strive for exceptional results. Third, they use them to evaluate and reward employees. Assume that you're a sales manager working with your boss to create a sales budget for next year. So again, this is about marketing people, right? Sales managers. This is meant for you, the salesperson. Once the sales budget is established, it will influence how other departments within the company plan to deploy their resources. And as you'll learn when we get to the chapters on budgeting, the first budget you make is the sales budget, because everything else flows from that. If you don't know what sales are going to be, you don't know how many units to produce. You don't know how many people to hire. You don't know whether you should hire a bunch of people part-time or half as many people full-time. You don't know where you should put warehouses if you don't know where the sales are going to be. There's a lot of stuff you don't know until you prepare the sales budget. So the sales budget is the first budget you prepare, and it's also the most important one. All the other budgets flow from that. So for example, the manufacturing manager will plan to produce enough units to meet budgeted. Budgeted is another word for estimated. When you see the word budgeted, it means estimated, in this course anyway, unit sales. The sales budget will also be instrumental in determining your pay raise, potential for promotion, and bonus. If actual sales exceed the sales budget, that's good news, right? You think sales are going to be 100 million, they're either 102 million, that's good news. So it bodes well for your career. If actual sales are less than budgeted sales, it will diminish your financial compensation and potential for promotion. Sometimes managers get a bonus based on sales, and sometimes they get it based on profitability. Profitability is the bottom line, sales is the top line. Wouldn't it be nice if you can sort of manipulate the numbers to increase your own bonus? Is that possible? Yeah, I'll show you how to do that here. Don't do it, but I'll show you how, just in case. Not tonight, but soon. You know, let's say that you tell the boss you think sales are going to be 100 million, and it's really 102 million. Don't you look good?
Yeah.
Yeah. What if you thought it could be 105, but you told the boss it's 100, and then it's 102? You look good, even though it's worse than what you actually thought, right? You want to make yourself look good. Yeah, when you as the sales manager make the sales budget, you want to construct it in such a way that it makes you look good. And you want to make it so that you can make the target. You think your boss knows that? Yeah. And so the boss will discount anything you say because he knows you just want to be able to make the budget so you can make your bonus. But you know that the boss knows that. And so what do? You alter your behavior. And the boss knows you're altering your behavior. You can see where this is going, right? It's like an endless regress. And it's a good budget is constructed both from the top down and the bottom up. You know, the people who are out there in the field talking to customers, they know more about certain sales functions than the people in New York thousands of miles away. But the people in New York thousands of miles away have their ideas about where the company should be moving. Maybe we should be moving into this market. Maybe we should be moving into that product line. The people on the ground floor may not perceive that stuff. So there are people at the top who have valuable information the people at the bottom don't know, but the people at the bottom have information that the people at the top should know but don't. And so when you construct a budget, sales budget especially, but other budgets as well, you should have interaction.
Yeah.
It's not just a top-down process, and it's not just a bottom-up process. Yeah, and if everybody is invested in it, then they have an incentive to beat the budget, so to speak. Increase sales more than what they thought it would be, and so forth. So the sales budget will also be instrumental in determining pay raise. You get a pay raise if you look good. And potential for promotion, you know, if there's an opening for a sales vice president, who are they going to choose? Maybe the person who has the best track record. And a bonus. You get a bonus either based on sales or based on profitability. So should you sell the stuff that's most profitable, or should you sell the stuff that increases your sales volume the most? Well, what's good for the corporation would be to increase the bottom line, right? Profitability. You push the stuff that's most profitable. But if your bonus is based on increasing sales by a percentage, profitability is sort of a second place thing, right? If you want to increase sales by 10%, you sell stuff that'll increase sales by 10%, not necessarily the most profitable stuff. So if your bonus is based on an increase in sales, you sell a certain basket of products. If your salary is, or if your bonus is based on how much you increase net income, you're going to sell the most profitable stuff first. Well, yeah, it could be an ethical question. Could be a rhetorical question. It started off being a rhetorical question, but it didn't end up that way.
Could it also be if you're aiming for brand awareness and to get your product out there that you'll accept a lower profit, just aiming to sell as many as possible.
Yeah.
And then at a later point, analyze the cost benefit, profit.
Yeah, that's another thing. And the Japanese are known for that. Again, for the purpose of those in cyberspace, sometimes if you want to introduce a new product into the market, if you want to increase your brand or whatever, you may sell at a lower price just to penetrate existing markets or new markets. And so profitability isn't necessarily your first concern, gaining market share. And the Japanese are known for that they'll sell something at a low profit margin or even at a loss just to capture market share. And then they'll either try to increase price later or reduce their costs so that they can make a profit. And American companies are more short-sighted that way. They've been accused of being short-sighted. One reason for that short-sightedness is because we have a requirement here that you have to report financial information quarterly. And we try to make quarterly profits rather than generational profits or profits over a decade or something. So that's part of that is cultural as well. So what are they requiring here? The first requirement, do you think it would be appropriate for your boss to establish the sales budget without any input from you? Well, the obvious answer is no, of course not. As we just discussed, that sales budgets should be a top-down thing and also a bottom-up thing. You have information the boss needs, and the boss has information that maybe you could use to plan a better budget as well. And I'm not going to read the answer, but that's basically what it says. It should be top-down and bottom-up. The second requirement, do you think the company would be comfortable with allowing you to establish the sales budget without any input from your boss? Well, that's obviously no. Wouldn't it be nice if you could, though, right? What could you do? You could say, well, we'll be lucky if we just make sales next year that are equal to what we made this year. We'll be lucky because it's a tough market out there. Then you increase them by 5%, and you knew that was going to happen anyway. And now you look really good because you're 5% better than what you thought you would be. And then you get a bonus based on that. Or if somebody gets promoted, it'll be you instead of somebody else kind of thing. So you have to have interplay back and forth. And your boss knows that you're going to play those games if they think you can get away with it and so forth. Number 3, assume the company uses its sales budget for only one purpose, planning to deploy resources in a manner that best serves customers. What thoughts would influence your estimate of future sales as well as your boss's estimate of future sales? What does the author have to say about that? Do you have any preconceived notions on this? You've had the book for a few days, right? You've had time to do the homework. Should I ask how many have done the homework? No. Let's make that rhetorical. Should you focus on customers or should you focus on profits? You can sort of do both, right? Yeah. If you don't focus on customers, pretty soon you won't have profits. So there's that interaction as well. So what does the author have to say about this? Or the authors, if the company used the sales budget for the sole purpose of planning to deploy resources in a manner that best serves customers, then it is possible that the boss and the sales manager would both be focused on producing the most accurate forecast possible. They would strive for accuracy because if they overestimate sales, it is likely to result in bloated inventories. And if they underestimate sales, it is likely to result in lost sales. Well, yeah, that's a good one-paragraph answer. Can we expand on that? Nobody wants to expand on that? Well, I mean, you have to be customer-oriented to a certain extent, but let's say you send people into the field and it's a business-to-business kind of thing where your sales staff goes to other businesses and they try and sell stuff. There's basically 2 kinds of salespeople, right? The order takers that ask the question, what do you need this month? And then the other kind, which I don't know what the name of the other kind is, maybe someone can tell me, where they push certain products. Is there a name for those people? They're not order takers. They don't ask, what would you like this month? They go in and say, we have this on sale. If you buy 100 units, we'll give you 5 free. We'll give you free delivery. We'll give you this. We'll give you that. This is really great stuff. It's selling like hotcakes. You can't keep it on the shelves. That kind of person, which person is more likely to have the bigger bonus? The pusher or the order taker? Begins with P, U, S, pusher, the pusher, yeah. Let's say you have those pushers. They go in to some sales district, they go into businesses and they sell stuff. They don't just take orders. Should you give them instructions about what to sell, or should you just let them loose and let them sell anything they want? Let's say they only want to work 40 hours a week. So there's a time constraint. How about pushing the stuff that has the highest profitability on an hourly basis? Right? There's a way to compute that using management accounting techniques. You know, if they can sell stuff that makes them a profit of $200 an hour minus their commission or salaries or something. You should have them push that stuff rather than the stuff where you only make 20% on or something, or $50 an hour. So somewhere in the organization, some management accountant has to come up with a set of numbers to figure out what's more profitable. And the constraint there is hours, it's time. The sales staff isn't going to work more than 40 hours a week in the field. And so how can you maximize their profitability? Figure out how long does it take to sell this product and what's the profit per hour. That's the constraint, that's the bottleneck. And then you tell them, we'll push this, sell them anything they want, take their orders, but don't just take their orders, try and sell this, try and sell that. And if you base their bonus based on a percentage of profit rather than gross sales, you'll get better performance out of them because they can understand if they push the high profit stuff, their bonus is going to increase. That's a way you can use management accounting to increase profitability as well as sales.
Nostrum uses that approach.
Mm-hmm. Yeah, the good companies will use that approach. But there are order takers, and there's a need for order takers too. You know, it's not an aggressive technique, and you get a different kind of person too. Order takers aren't as aggressive. They just say, well, do you like this month? Or worse yet, they say, would you like anything? You ever go into a deli in New York, or maybe a deli anywhere, but especially in New York? You know, you go and you order something. They never say, would you like anything else? They say, what else? You know, if you say, would you like anything else? You can say no. But if they ask you a question, what else would you like? Then you think, oh, what else would I like? You increase sales that way. That's the difference between an order taker and someone who gently pushes without being a nudge, as they say in New York. Okay, so that gives you a little flavor. We don't have to go through all these. You have the answers anyway on Canvas. Number 4, let's take a look at that one. Ethics in the manager. We can discuss ethics as long as we don't have to implement it, right? Oh, this looks like it's a straight thing from the IMA Code of Ethics. Well, let's take a look anyway. Some of this stuff can be less than exciting. Ethics in the manager. Richmond, Inc. operates a chain of 44 department stores. 2 years ago, the board of directors of Richmond approved a large-scale remodeling of its stores to attract a more upscale clientele. Before finalizing these plans, 2 stores were remodeled as a test. Linda Perlman, assistant controller, was asked to oversee the financial reporting for these test stores, and she and other management personnel were offered bonuses based on the sales growth and profitability of these stores. While completing the financial reports, Perlman discovered a sizable inventory of outdated goods that should have been discounted for sale or returned to the manufacturer. She discussed the situation with her management colleagues. The consensus was to ignore reporting this inventory as obsolete because reporting it would diminish the financial results and their bonuses. So you had a lot of obsolete inventory. Wasn't selling. What should you do with it? Well, you should get rid of it somehow. Send it back, sell it at a deep discount. That hurts profitability. So the first requirement, according to the IMA's Statement of Ethical Professional Practice, would it be ethical for Perlman not to report the inventory as obsolete? Well, even without looking at the IMA Code of Ethics, basically, you're hiding information from the boss, right? Isn't that what you're doing here? You're hiding information from the boss. So even without looking at the IMA Code of Ethics, you probably say, she should, in the interest of full disclosure, she should tell the boss, this is obsolete inventory, we should get rid of it, and please don't reduce my bonus, don't punish the messenger, but it might reduce the bonus because it reduces profitability. So what did the authors say? This is a textbook approach. I mean, failure to report the obsolete nature of the inventory would violate blah, blah, blah. Competence, you're not being competent if you don't tell the boss all the information that's relevant. And integrity, you have low integrity if you don't disclose everything the boss would find relevant. And credibility, if you do that often enough, you'll probably get fired. But after the bonus check clears, maybe. Not to be cynical, but again, credibility, communicate information fairly and objectively, disclose everything that's relevant. There's a certain amount of subjectivity here because what's relevant, and it does hurt your bonus because if you tell the boss that the inventory is obsolete and they may sell it at a loss, that's going to decrease the bottom line. But you're supposed to do the right thing without regard to how it affects the bottom line. Now at the bottom there, they say it's an unofficial CMA solution. What does that mean? Unofficial CMA solution. It means this is on a former CMA exam, Certified Management Accounting exam. This was an essay question, and the people who graded the exam would look for these kinds of things when they're trying to figure out the grade, if it was a good answer or not. So this came from a CMA exam. That's not too bad, right? Not too intimidating. You know the answer now for a CMA question, which is almost like a CPA question. So am I building up your confidence? Not yet. I'll keep trying. I only have to succeed once, right? And for part 2, would it be easy for Perlman to take the ethical action in this situation? Again, this is CMA adapted, meaning it comes from a prior CMA exam. Again, some of these ethical decisions are sort of tough. In the real world, you might run into some things that are even tougher. What if disclosing something could cause you to lose your job, but it's the ethical thing to do? Yeah, like a product defect. Let's say you work for General Motors or Ford. There's a product defect. Lots of people in the organization know it's a defect, but the cost of correcting it would cost $30 million, and the economists say, we'll only lose $10 million in lawsuits from this, so let's just keep it quiet. And you blow the whistle. You lose your job. And could you get another job in the auto industry after that? Would anyone want to hire you? Yeah, you have to get a job in another industry, maybe change your name, move to another city. There's all kinds of, so these are ethical dilemmas that. Yeah, and then hope it doesn't catch up. Yeah. Wouldn't it be nice if you could actually be rewarded for being ethical? Sometimes that happens, I guess. I can't think of an example offhand, but yeah. But then there's different kinds of rewards too, right? There's rewards in this life and then the next life.
Yeah.
But the rewards in this life are pretty important, though. Like a job. Yeah, the present is important. Number 8, cognitive bias. Let's take a look at that one. In the 1970s, 1 million college-bound students were surveyed and asked to compare themselves to their peers. Some of the key findings of the survey were as follows. 70% of the students rated themselves as above average in leadership ability, while only 2% rated themselves as below average. Well, you'd think, at least with that bell-shaped curve, that half would be above average and half would be below, more or less. But they had a better opinion of themselves, apparently. Part B, with respect to athletic skills, 60% of the students rated their skills as above the median. And again, the median, like on the road, it's in the middle, right? Median. And only 6% of students rated themselves as below, where you'd think it would be half above and half below. So apparently they have a pretty positive image of themselves. Cognitive bias. 60% of the students rated themselves in the top 10% in terms of their ability to get along with others, while 25% of the students felt they were in the top 1% in terms of this interpersonal skill. So you can see what they're getting at here, right? There's a bias. Perhaps you think better of yourself than other people would. I mean, half of the people are below average and half are above average, because that's what averages are all about, right? It doesn't mean you're smart or dumb. It just means you're either above average or below. Half of the people in this classroom are below average for this population. Or let's keep it positive. Half of the people in this room are above average for this population. So should I ask how many people think they're above average? Look at these people. Are you better than they are? No, that would be rhetorical. Okay, so what do the authors say about this? The type of cognitive bias revealed by this data is called self-enhancement bias. This bias occurs when people overstate their strengths and understate their weaknesses relative to others. You tend to do that in the workplace probably too, right? You know people that you work with that you think, oh, wow, how can they not be fired? They're so stupid or incompetent or something. And they might say the same thing about you. Of course, they're wrong, but you know, that's what they talk about. Yeah. This bias may cause managers to be overly optimistic when making plans for the future. Now, here's where you can apply it. Let's say the sales manager, for instance. Oh, yeah, we can increase sales by 10% next year. Everybody else says, oh, I don't think it's going more than 4%. But the sales manager says 10, maybe because it's a macho thing to say to the boss, or maybe because he or she is overly optimistic. It could be a cognitive bias there. So how can you deal with that? Any ideas? How do you deal with the cognitive bias when the sales manager says sales will probably increase by 10% and everybody else thinks it's 4 to 5? They have a little conversation. You know, maybe if it's embarrassing, pull that person aside and say, yeah, I think maybe 4 or 5 might be better. Maybe you're overly optimistic. Maybe you should crank it down a notch. Interaction, that's the thing in communication, which is sort of what the authors are getting at here. So there is some psychology involved in some of this. It's not just management. It's not just accounting. Some of this is squishy, soft psychology stuff. How many psychology majors in here? Show of hands. None? Oh, I have some in cyberspace. Sorry. Sometimes I get emails and they say, I'm a psychology major, or I'm a history major, or I'm a this major, that major, French literature major. This is all new for me. Oh, yeah, it was all new for me too once. I just got the hang of it and couldn't quit. Yeah, everybody likes different stuff, right? So I just happen to like this. Maybe you will too. I'm hoping by the end of the semester. Did I mention that? I want to convert everybody? No, not really. I just want you to like the course because there's some interesting stuff here. And some of it I can tell you about. Number 9. Yeah, we have that. Ethics. Oh, here's another ethics one. Oh, this is a good one too. I've actually run into a situation like this. Ethics in decision making. Assume that you are the chairman of the Department of Accountancy at Montana State University. One of the accounting professors in your department, Dr. Candler, has been consistently and uniformly regarded by students as an awful teacher for more than 10 years. Other accounting professors within your department have observed Dr. Candler's classroom teaching, and they concur that his teaching skills are very poor. However, Dr. Candler was granted tenure 12 years ago. And when you get tenure, that means they pretty much can't fire you. It's very difficult to get rid of someone who has tenure. Not impossible, but very difficult. Basically, they can't get rid of this guy, thereby ensuring him lifelong job security at Montana State University. Much to your surprise, today you received a phone. You received a phone from an accounting professor. I think that was a phone call. You received a phone. Somebody gave you a phone. From an accounting professor at Oregon Coastal University. During this phone call, you are informed that Oregon Coastal University is on the verge of making a job offer to Dr. Candler. However, before extending the job offer, the faculty at Oregon Coastal wants your input regarding Dr. Candler's teaching effectiveness while at Mountain State University. Wouldn't you love to get rid of this guy? You say, wow, this guy is great, we hate to lose him, but take him, please, kind of thing. But that would be dishonest, right? It's a case of utilitarian ethics, what benefits you. So the requirement, how would you respond to the professor from Oregon Coastal University? What would you say about Dr. Candler's teaching ability? Would you describe your answer to this inquiry as being ethical? Well, there's a couple approaches you can use. Now you can say, oh, he's great, you know, hate to lose him, but blah, blah, blah. What would be wrong with that answer? Yeah, it's misleading, downright lie, but it helps your university. Do you have more of a duty to your employer than you do some other employer? Yeah, the other employer isn't paying you anything. Your university is paying you to do positive things to help the university. Would you be helping the university if you gave this guy a glowing report? Yes. Therefore, you're supposed to conclude, yes, you should lie, right?
Not lie, just might say that he would be a great fit for your
Yeah, a great fit for your university, which I've heard is a lousy university anyway. This guy would fit right in. Yeah, okay. So what about the other approach, being honest and saying, we've been trying to get rid of this guy. Students don't want to take his classes. He's a lousy professor. Everybody knows he's a lousy professor, but he's tenured. That would be the honest thing to say. How could you be a little less than completely honest without actually telling a lie? What could you say? What would your response be, maybe?
I think you'd be a better fit at your university.
That would be true, sort of. Yeah, it'd be a way to sort of get rid of that. This one university where I used to teach on Long Island, there was this professor. He said the reason he got low evaluations is because he was tough and he demanded something of his students. But the students said, I didn't learn anything in this class. So there was a dispute there. But basically, for sometimes, I mean, this guy got a reputation, and for some of his classes, he couldn't even get 10 students to sign up. And if you didn't have at least 10 students, they canceled the class. So this guy's classes were all getting canceled. And so how did the university deal with that?
You got it done. Thank you.
Well, there's a couple things they did. They had two campuses. They had one in, what's the county that's closer to New York? There's Suffolk County and the other Nassau County. They had Nassau County closer to New York was his main place to teach. They sent him to Suffolk County where the students hadn't heard of him. That worked for a few semesters until the word got out. And then after that, what they did, you ever have these courses where it lists, the course time and everything, and it says Professor TBA to be announced or TBD to be determined or something?
Yeah.
That's what they did with all of his classes. So the students would sign up not knowing that he was going to be the professor.
Well, you could always change, right?
Yeah, you can always drop an ad. Yeah, but this guy, I mean, they had to pay him because he was tenured, but nobody wanted to take his classes. So. Yeah, there's a thought, give online classes, except he might be a poor online teacher. They didn't have online in those days. They just barely had electricity. This was like the early 80s.
So it just kept going on and on and on.
Yeah, eventually, I think the guy retired. I left before he retired, but he was an okay guy. I think he was better as an accounting practitioner than he was a classroom performer, because he didn't know his accounting. It's just that the students didn't like him. He did demand a lot, and he was quite proud of that. But I don't know. So, but anyway, these are sort of real life stories. Some of these.
That would be you because you still teach them. So
yeah, it wouldn't be me. I'm still teaching now. Yeah, I've had complaints sometimes that I give too much work. I've toned it down a bit, except when I teach accounting majors. When I teach accounting majors, especially the juniors and seniors, a lot of them want to be CPAs, so I teach them how to prepare for the CPA exam. So I used to write CPA review materials that they used in the training courses. I used to teach CPA review. I used to fly around the country for Harcourt Brace, opening up new CPA review locations because they used to have a CPA review course. So I was really into it, And so the students love that because I can tell them all the little shortcuts to get an answer correct, even if you don't have a clue, by just thinking through and reading it twice. And a lot of times with a multiple choice ABCD, you can eliminate a couple things. And if you sort of know what's going on, you might be able to eliminate 3 of the 4. So even if you don't know about leases, for instance, you might be able to just figure it out by looking at it a certain way.
are you going to teach us that?
How to pass a CPA exam? If you want to. These questions are so light, fluffy. They're like popcorn. You chew them up and there's nothing left, This is like freshman, sophomore in terms of level, You have to learn the first step. This is like the second step on the ladder. The first step was financial accounting. And if you didn't have financial accounting, you're not at too much of a disadvantage because we don't have too many journal entries in here. And, you know, financial statements, if you forgot them, they're easy enough to learn. There's only 4 of them, and we deal mostly with 2 of them. So you only need to sort of know 2 of the 4. Now, if you haven't had financial, you're at a slight disadvantage. But or if you had it 14 years ago and forgot, that's okay, because this course is sort of different, and it's based on logic, not rules. So, yeah, you'll see. A lot of this stuff is not bad at all. Just maybe things you haven't thought of before, or you haven't thought of from this particular perspective. But it's like applied microeconomics. I keep saying that. I don't mean to scare you off, but this is low-level microeconomics. There's no calculus in here, no differential equations, not even much algebra. And if we have an algebra, there's none of that squared and cubed stuff. There's no square roots in this class. I don't want anybody coming in here with any square roots. I'll kick you out. Yeah, it's easy, simple kind of stuff. How are we doing time-wise? Oh, another thing I should mention, by the way, for these 3-hour classes, it's supposed to go from 6 to 8:50. There's supposed to be a break somewhere. It could be in the middle or it can be at the end, about a 15-minute break. So I always ask this question, and since the students in cyberspace can't vote, sorry, whoever's in here, including the cyberspace students who happen to be here, I'll give you 2 questions. First, the first option, how many want to have the break in the middle? That'll be the first one. Second question, well, how many want to have it at the end? I'll ask for a show of hands. So the first question that comes up for a vote, how many want to have the break in the middle? And then we go to 8:50. Show of hands. No. Okay. Second question, how many want to have the break at the end and we get out of here about 8:30? Show of hands. Yeah, I know that's the answer, but I want to project the image that I really care for your opinion. That's a joke, folks. Yeah, the only time I'll ask for a vote is when I don't care what the outcome is. So, yeah, it's more efficient this way, too, because if you break it up in the middle, you know, people go out and they come back at different times. And this way we go straight through. We covered a lot of material, really. We covered management, marketing, psychology, microeconomics, a few other things, and a little bit of accounting. Not too much accounting. I didn't crunch any numbers here, but the number crunching will start Chapter 2, Managerial Accounting and Cost Concepts. We're going to start getting into the good stuff next week. So, again, what should you do between now and next week? Read Chapter 2, reread Chapter 1. I know you've already read it once already, right? You have a few quizzes. I don't know how many I put up there, 2 or 3 or something.
For this Sunday, because this Sunday was Chapter 1, right? There's no Chapter 1.
Yeah, there's no Chapter 1.
So the first quiz will not be this Sunday, but the following Sunday?
Yeah, the first quiz will be on Chapter 2. It's due Sunday at 11:59 p.m. New York time, or Fayetteville time if you prefer.
Any word on the Connect additive? Any upgrade? I mean, we still have to pay that one.
Yeah, I don't know exactly how that works. I think Connect has several prices depending on which package you buy. And you can, the bookstore is supposed to be able to sell it, but if they don't sell it, you can get it directly from the publisher. Oh, one thing I should mention on that, the first PowerPoint slide I sent you, it says the first day of class, PowerPoint or something. Yeah, on the 7th slide, they give you some information there that's important. Well, it's all important, but I mean, look at page 7 of the slide, the 7th slide of that first class slide thing. And then look at as much as you can from the what's on Canvas. I gave you links. I went to YouTube, sitting there on the couch. My wife was watching some show that I didn't really care for too much. So I sat there pretending like I was paying attention to her, and I said, yes, dear, and stuff. But I was also going through YouTube, copying and pasting a bunch of links to people who've done lectures on these various chapters. And some professors have 50 or 60 or over 100 videos on some of this stuff. And so I posted a document there with a whole bunch of YouTube links. Now, some of those lectures are better than others. There's no way you're going to go through all of them. I just put too many links in there. But sample them, try a few, see which ones you like. And I labeled who the provider is. And if you find a certain provider, a certain lecturer or professor who you like more than the others from those slides, just look at those. But there's lots of stuff to look at. You know, if you wanted to do this 60 hours a week, there's enough material to do that. And I realize that I'm the only class you're taking. You don't have any job or family responsibilities. It's just about me, right, folks? This is your only class and blah, blah, blah. So, but I mean, the information's there, and I've given you the answers to the stuff at the end of the chapters. And, you know, there's lots of stuff. It's up to you what you want to do and how much time you want to spend, how efficiently you want to spend it. You probably should not read the chapter through more than about twice, because any more than twice is an inefficient use of time. Spend your time crunching the numbers. What you do when we get to the numbers is look at them, try and solve them without looking at the answers. You can go to the book, you know, figure out which paragraphs and which pages are relevant. Try and solve them. Push the pencil, because accounting, one of my professors told me, accounting is learned at the end of the pencil. You're not going to get it by reading the book. You have to push the pencil. You have to try and come up with the answers. Once you get an answer that you think is pretty good, look at the answer that's in Canvas and see how close you came. And then if it wasn't the same, figure out why the author's answer is different. Usually the author's answer is correct. I say usually, once in a while we make a mistake. I mean, they make a mistake. You know, and if it looks like I make a mistake, it's not really. I'm just testing you to see if you're paying attention, right? You'll see that a few times this semester, but it looks like I'm making a mistake. But yes?
I was just going to say the videos, the YouTube, they're great, because I was watching, some of them are redundant, like, you know, if you watch one person and you go out, that's the same thing. So other than that, great. Like what you just covered, I watched on 2 videos, it's just the same thing.
Yeah, I face a risk by doing that. You might like them more than me. But yeah, I mean,
They have different styles of
yeah.
teaching, but they're great.
Yeah, and they practice too, whereas I don't practice. I just wing this stuff. Make it up as I go along. Well, not exactly, but yeah. So anyway, it gives you a variety of perspectives, and the goal is to teach you as much as I possibly can in this short little time we have. And so that's what I'm trying to do. Keeping in mind that not all of you want to take the CPA exam. I don't know why not, but yeah, I realize you're not accounting majors, and I've toned it down a bit. You know, if you came into my intermediate accounting class, you would see that it's completely different. It's all numbers all the time, and they love it. But yeah, so I've calmed it down. I keep the audience in mind. And of course, if I get a high conversion rate, then I'll crank it up a bit. No? Okay. Any questions? You're going to come back next week, I hope? Okay, that's what I want to hear. So have a nice week. Feel free to email me 24/7. I'm not going to be up waiting for your email. I sleep once in a while.
Thank you.
Yeah, thank you. Thanks for coming. Thank you for not throwing eggs and tomatoes. Thank you for those in cyberspace, wherever you are.
Thank you.
Going to bed.
Sometimes they throw it in public. I don't know exactly.
What is it with the healthcare management? Because healthcare management. Okay, I work at the VA, so but my healthcare management, I feel is already
Okay. Thank you. Yep, you're welcome.
Thanks, sir.
Yeah, thank you. Thanks for coming.
What's that?
Yep. Okay, you're welcome.
Yeah, I have a question. So the homework that's